next 2 to 3 years. And because of high competition, one has to look at in how they are able to capture the market and all that. So one has to be a little bit careful in this stock. Of course, if someone have a high risk taking ability, then only better you go to it. Of course, if it becomes consistent profitability, I think stock may go up. But as I told you, if someone has a high risk capital, then only go for this stock.
Right. Moving on to a couple of counters that have been buzzing on the back of strong earnings. But I guess Rallis has fizzled out post the numbers. Let's get in Varsha with more details on what led to this strong numbers for Rallis and Websol.
Well, overall, a good set of numbers when it comes to Rallis, though the stock has come off a bit. But speaking about the Q4 FY26 numbers, the numbers were driven by, of course, volume growth versus value growth. Revenue growth was supported by volume expansion and the stable pricing that the company has seen, and the demand was mixed across crops and geographies. A lower pest pressure impacted demand in some crops, I would say. Talking about the growth split, the growth was driven by 5% volume and 1% price growth. Onto the FY26 numbers, though, performance was driven by volume growth and cost optimization. PAT increased almost 184 crore versus 125 crore in FY20 over FY25. Talking about B2B exports and their custom synthesis, the business grew 17%, and over here, if you see, the growth was supported by volume expansion in international business division and also improved realization across key molecules, which includes custom synthesis. Talking about seed business, saw 15% growth in FY26 and 23% in Q4 FY26. Onto our next counter, which is Websol Energy. A good set of numbers, but margin pressure is what company has seen. If I were to talk about numbers, revenue was 401 crore, EBITDA was up 86%, though EBITDA margins were at 36% versus 45% last year. So there's a huge downtick in terms of margin, but we all know that as we scale up in terms of revenue, because of the product mix, margin may have to take a hit. While net profit was at 125 crore versus 42 crore last year. Onto the key highlights, there was a high capacity utilization of solar cell, almost more than 90% of the capacity utilization which the company has seen. Solar module, in fact, saw 74% of utilization in Q4, more than double what they did in Q2 FY26, and their second line was commissioned in September 25, taking to the overall capacity of 1.2 gigawatt. Lastly, onto the order book, Q4 FY26 order book stand at around 1,161 crore, out of which solar module is at 695 crore, followed by solar cell at 466 crore.
Right. Tapan, quickly your view on Websol and Rallis India.
Rallis India, again, this quarter it was a loss. Of course, it has been lesser loss, and overall, I think still the struggle will continue, even though it's a peak season. Hopefully, margin improvement will be there from here. But I think the overall revenue growth is not so great. So my take is, I think one can avoid Rallis if they want. Talking about Websol, of course, strong comeback. But the stock also fallen a lot. Hopefully, things will be better. Capacity expansion going on, and solar demand is also there. But so one can hold the stock for a little bit longer if someone is in Websol.
You're right. Tapan, thank you so much for helping us answer, helping us understand all those small cap buzzers that we discussed. But with that, viewers, completely out of time on this edition of small cap buzzers. If you have stock related queries, then do stay tuned. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन
मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Welcome you for watching Ask Profit. You can go ahead.
No, it's okay. Welcome back to Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me, as always, is Mahima Vachajani. And over the next half an hour or so, as we try to decide who starts the show, we'll start taking your questions as well at this point of time. So do start sending in on the number that's flashing on the top of the screen. You can also call us as well on the number, which is the landline number flashing up there as well. But very quick check of how the markets are doing, because it's been a decent session at this point of time for the markets. We've seen buying at the upper end, but then starting to see selling over the last hour or so. So Nifty is down to roughly around 0.4% at this point of time, just barely with the slowest margins actually keeping the 24,000 mark. When you look at the heat map also, that shows you that some key stocks like Maruti as well as Eternal will be in focus today on the back of their results, and could come any time now. Generally, Maruti does come during market hours, so we'll continue to monitor those earnings. Stocks down 1% now, almost 0.5% as we speak, but ONGC, Coal India as well as Adani Enterprises are the top three gainers. So is Nestle doing well in trade, while Eternal actually just before earnings is the biggest loser on the Nifty 50 today. The key commentary on the quick commerce will of course be something that we'll be watching out for, and Mahima will be tracking that. But Axis Bank, HCL Tech and Indigo are the other losers today. In terms of what we've seen in terms of the sectoral heat map as well, PSU Bank continue to be and bearing the brunt essentially at this point of time for the markets. The Nifty Bank is also down on the back of those news flows coming in on ECL norms by the RBI, while the CPSE and oil and gas actually has now increased to the biggest gainer for today. But the advance decline ratio also very interesting, because almost 1,500 stocks were advancing in trade today in the morning versus 1,000 declines. That has essentially reversed completely in the last 3 to 4 hours of trading session. So last hour becomes very crucial. But Mahima, overall, the broader markets is also showing you what the advance decline, the pressure visible on the advances today.
Yeah, absolutely, and probably expiry also playing its part, right? The mid cap 150 is completely, turned into flattish mode right now, but almost trading at its day's low point. The small cap 250 still holding up a tad bit, but off from its day's high point completely. Let's quickly try to pull up the BSE 500 and see as to what that picture is looking like and as to what counters are doing well. Cohen's Life Sciences has also given up the gains it's seen in the morning, but still trading around 12% higher. Tata Chemicals, Uflex are some of the names that are doing fairly well. On the flip side, you have Rosary Bartek, India Cements, Tanla Platform, Gujarat Alkalis that are seeing a downtick of 3 to 6% each. But let's start taking your questions. We're joined by Akshay P. Bhagwat, Senior VP of JM Financial, and Radharaman Agrawal, Managing Director and CEO at Swayam Advisors, joining us now, who will be answering all your stock-related questions. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. The first question that we have is on banking names. Our viewer, Sai Kumar, wants to know that from a one-year perspective, this is a good time to make an entry into something like an HDFC Bank, ICICI Bank, or Axis Bank. Akshay, I'll come to you on this one. Do you think any one of these or maybe a few of these advisable to make an entry right now?
First of all, good afternoon. Yeah, from an entry perspective, I think ICICI Bank is the best among the three. If you're looking from a one-year perspective, then the suggestion is do not buy at the current price, but you need to divide your buying in three tranches if possible. So 1299 is the current market price. From the current market to 1200 in this 100-point range, divide your total buying cost in three tranches. That is the advice.
Okay, all right. So that's the view coming in on the banking space. We've got our first caller. Sanjay is calling us from Mysuru. Sanjay, very good afternoon to you. What's your question about?
Hi, ma'am. Good afternoon, ma'am.
Go ahead, ask your question, Sanjay.
Ma'am, Kalan Jewellers India shares 1,217 in average price of 407, ma'am. Short or 3 months, ma'am. Please technical analysis, ma'am. Seller hold, ma'am.
Okay, got your question, Sanjay. Akshay is sitting on mild profits of around 6,000 rupees right now. Would you advise him to continue to hold Kalyan Jewellers?
See, it's more of a neutral setup on technical charts, and if your time horizon is limited for a month or just around it, the suggestion is better to take an exit.
Exit is what Akshay recommends as well, but let's go across, take the next question now. This one's coming in on Zidus Life. Now, stock was one of the biggest movers, I think, this week itself, almost 12 to 13% we saw on one single day. Today is down 3%, and our viewer wants to know if it's the right time to actually enter this counter. Radharaman, very good afternoon to you. Would you recommend that?
Yeah, good afternoon. I think he should hold on a bit in terms of there was a run-up which happened. So you should wait and maybe appropriate time, let the correction come in a bit, and then you should enter that stock right now.
Okay, all right. The next one that we have is on Zidus Life Sciences. Okay, sorry, this is done. The next one that we have is on Vedanta. Our viewer, Shiv Kumar from Bengaluru, wants to know as to what levels is it attractive to buy Vedanta from a long-term perspective is what he's asking. Radharaman, considering that the demerger is set to happen on 30th of April, would you recommend a buy right now on Vedanta at these levels from a long-term perspective?
Yeah, from a long-term perspective, one can look at Vedanta, but at the end of the day, one should look at, because you are getting into multiple set of companies, right from aluminium to power, and then the whole zinc piece. So effectively, the investor should be looking at that you will get a demerged entities into this, and one should be looking at holding for long run and then decide which ones to hold on and which ones to discard. So effectively, he'll be getting into multiple companies with different sectors. So it's better that we look at and identify that before getting into it. And there's already a run-up which has happened in the stock if you look at from before demerger. So if you want to hold it for a long-term period, definitely can look at, but not for a short-term or a medium-term.
Not for a short-term or medium-term is the view coming in on Vedanta for now. But let's go across, take another caller from Hyderabad. And Aruna has a stock query for us. Aruna, very good afternoon to you. Welcome to the show. What's your query?
Yeah, very good afternoon to all of you, sir. Thank you. Yeah, I'm having Biocon. I'm having a holding of Biocon, 350 average of 400 shares.
Okay.
So what is the short-term and long-term view on this? And if I want to add, what is the price to add?
Got it. Well, so Aruna, you bought it with the fundamental view, right? When you bought it initially, and then you want to view now if it's a good time to add more. Is that correct?
Yes.
Yes, got it. Well, Radharaman, coming back to you on Biocon, because we've seen the stock largely trade in this range also between 300 and 400. But would you recommend Aruna to continue to hold, and is there a good time to buy as well?
I think she should refrain from buying and adding now. She can hold the current position. And she bought it at the almost similar price. So I think she should hold on and then wait for a time to come. So there's no point adding right now, but she can hold on to the current position.
Next one is on Home First Finance. Usha from Bengaluru is holding 300 odd shares at the levels of 1134. Wants to know from a 6 to 12 months perspective, can she add more at the current levels? Akshay, your view on Home First Finance?
See, from a 6-month perspective, I think you can consider adding more. But for short term, that's for a week or for the next 15 days, you can expect slight correction in the stock where you can average. The levels based on technicals would be somewhere around 1075 roughly. So if you get that dip of 1075 plus minus 20 odd points, consider buying it from a 6-month horizon. The possible target projection works till around 1400 for this time horizon.
Okay. We've got our next caller. Bharat is calling us from Andhra Pradesh. Bharat, a very good afternoon to you. Go ahead, ask your question.
Good afternoon, madam. I am holding 100 shares of United Spirits at the price of 461. So I am looking for 6 months view.
Okay. Got your question, Bharat. I'll take this up with Akshay again. Then, Akshay, your view on United Spirits with regards to where charts go?
So on the charts, the clarity is 1250 is a massive support for the stock going by the last 1.5 years of price action. It is recovering time and again from the support zone. And right now from a 6-month horizon, there are 2 targets which you can consider. The first target should be around 1465. That's a strong resistance, hence it's target 1. And if that breaches, then you can hold on for targets till 1550. So roughly these are the 2 targets you can work with from a 6-month horizon.
Got that view, Akshay. So that's a view coming in on United Spirits, a technical view. But next question coming in from Urmila. She is holding HDB Financial from the IPO and holding 90 shares. So that's roughly around 740, I think, the IPO price. Asking what she should do on a long-term basis. Radharaman, coming to you, because we've seen this quarter being very strong for the company. Stock has also rebounded from the lows of almost 580. But would you recommend her to continue holding her existing shares, and if is there enough evidence now to buy more at this price?
I think she can continue. Maybe if required, she can add from a medium to long term perspective. The results were quite good, and in fact, the outlook also remains positive. So I think either she can add and maybe take it forward, but from a medium to long term perspective only.
Okay, the next one that we have is on REC. Shankar Kinger is holding around 4,200 shares of REC at the levels of 430. Should I add more of REC or take fresh entry into PFC from long-term perspective? Radharaman, considering the merger that's going to happen, REC getting merged into PFC, would you recommend him buying REC more, or should he buy more of PFC? Or maybe he can even sell his stake in REC and go ahead and buy PFC?
I think she can do a combination of both REC and PFC. And given there's a lot of tailwind in the power sector now, and there's a lot of momentum coming in, so I think both the stocks can be looked at for buying purposes.
You also have the ratio as well for both those counters already out there, so it's more like an arbitrage play now. Eventually, all companies, both REC now merging into PFC eventually once the time frame happens. So that's something to watch out for both these counters. But the next one, Akshay, this one's an interesting one. Our viewer is asking this, the question. Is largely on consumer services companies. So Devyani, Sapphire, as well as Jubilant Foodworks. What's a better stock to pick in terms of charts is what the question is from a near to medium term. What would be your opinion?
So out of these 3 charts, I think Jubilant Food is the best if you are going strictly by the price charts. The reason being that Jubilant Foods, if you see the price charts, going by the last 2 to 3 years of price history, there is a very strong support at the levels of 410. And time and again, there is a tendency of the stock to show a strong bounce back from the support zone. Lately, we have seen the similar kind of price action happening at 410. And if the same pattern continues, then in all likelihood, you can work with upside of around 580 to 600 from a short to medium term perspective.
Okay, in fact, Sapphire Foods just posted earnings a few minutes ago. Overall numbers looking fairly well in terms of where the 4 numbers go, that is revenue saw an uptick of 11%, EBITDA an uptick of 17%. Margins have also improved. Of course, there is a one-off gain that has also come in at 12.8 crores, but overall numbers seeming fine. I think the same-store sales growth and volume growth is something that we'll be looking at once the presentation or press release is out. But that's with regards to where Sapphire goes. But Infosys is the other one that Venkat from Chennai wants to know about. He's got around 40 shares, wants to know from a long-term perspective, can he continue to hold? Radharaman, your view?
I think IT has gone through a deep correction if you look at, and it is continuing given the whole AI piece. So I think he should hold on. This price not to cut the current piece and he should hold on. But the thing should be, he should not be adding at these levels. He should wait on the current positions.
Got that view. But the next one is a very interesting one. This one's from Venkat Raman, who's a senior citizen from Bangalore, and very interesting that he has almost 15% of his portfolio in the auto stocks, and he's given 11 names across the one. So you have the majority ones, Ashok Leyland, Bajaj Auto, M&M, you count it, and he has it in his portfolio. Now, he's saying that out of the 11, almost his gains of almost 10, except Tata Motors right now. Now, Radharaman's question is very interesting. He has 11 shares, he wants to cut it down to 5, and he has all major OEMs within this. So, the two-wheeler pack, the four-wheeler pack, he has all of those names. What would your recommendation be in terms of preference of order for those 5 to 6 holdings that he can hold and 5 to 6 he can let go? What's your opinion?
So I think auto has been doing quite well. If you look at, given the whole GST push, there's a lot of tailwind which has got in the sector. So from a four-wheeler, two-wheeler perspective, he should do a two-split. One, he should get into maybe 2 or 3 four-wheeler companies and 1 or 2 two-wheeler companies. So if I look at in order of priority, you can look at a M&M and Tata Motors to that extent, and then typically on a two-wheeler, you can look at a TVS and iShares to that extent.
Okay.
So maybe he can look at a split 4 to 5 stocks only, and he can add maybe a Mahindra to that extent in the portfolio. So he should restrict his holdings to maybe 4 to 5 stocks only.
Okay, all right. There's, we were just talking about Sapphire Foods, and that's the KFC same-store sales growth that's come in at a 14-quarter high. We've been seeing persistent negative same-store sales growth coming in for something like a Sapphire Foods, but this time it's coming at 4%. So there's some recovery when it comes to the consumer sentiment overall when it comes to Sapphire Foods. Overall, KFC, of course, at 14-quarter high, but overall same-store KFC overall same-store sales growth at 12-quarter high, and KFC same-store sales growth at that 14-quarter high is what we're seeing. Probably some recovery is what we should expect in the counter, though that's not reflecting yet, but let's wait and watch when it comes to the stock performance. But let's move on to the next one. We've got SBI Life Insurance as the next query. Our viewer wants to know if this is the right time to make an entry from a short-term perspective. Akshay, your view on SBI Life?
So for SBI Life, the price charts are signaling that we are potentially trying to bounce back from a support zone of 1760. Yesterday, that validation has come in terms of price action at the support, and in all likelihood, from a short-term perspective, 1900 to 1925 can be the pullback targets. So continue to hold or buy with stop loss below 1740.
Got that view, Akshay. That's on SBI Life, but go across to the next question. This is Arvind, who's a regular viewer, and he's asking on CESC. Now, largely being if it's a good time to add is what his question is, Radharaman, and we of course he's asking that if there could be any potential price rise post elections as well. But largely, what's your view on CESC? Is it a good time to buy?
So I think it's a good time to maybe add on the CSC counter. The counter is also a lot of tailwind. And the elections also getting through. And normally you've seen that CSC, the rates also go up post the election. So I think the elections are getting over. And with that, one should be looking at maybe some increase in the tariff as well. So that should be good in terms of adding to that extent.
Okay, the next one, Kotak Mahindra Bank. Jose wants to know about this counter from a long-term perspective. Radharaman, your view on Kotak Mahindra Bank?
The bank looks positive. I think the bank is expected to do well, and one should do an addition to the stock from a medium to long-term perspective.
The next one coming in, actually sticking with the banking space, is on Canara Bank, and Srinivas from Hyderabad is asking us this question. He's holding shares at 141, holding 5,700 shares. So stock just a tad below that level. Radharaman, we've seen those new ECL norms come in, and largely all the PSU bank take a knock. Would you recommend him to lighten his position a little bit? He's holding 5,700 shares, or continue to maintain and probably wait for Q4 earnings?
I think he should wait for the Q4 earnings. I think the ECL norms will set in, and that will apply to all the PSU banks. So it's more of a temporary blip which is going to happen, and he should wait and move ahead. The bank, the numbers have been steady, and I think he should wait and take it forward.
Okay, Radharaman as well as Akshay, it's time for our rapid fire round. Try to keep your answers short as possible. The first one's on Cohen's Life Sciences. Mr. K. Chaudhary has bought 400 shares at the levels of 472. Exit or hold from a short-term perspective, Akshay?
Hold for targets of 540.
NCC bought at 144 by Mohit. Akshay, his question is it advisable to reach 220 by the year end?
Difficult. At least 190 looks possible.
Good entry price for MTAR Tech. Ramana from Bengaluru is asking. Akshay?
MTAR Tech, you can continue to hold.
Sanjeev Pathak is holding on to Electro Steel shares at almost 81 rupees, Akshay. He's asking if it's a good time to exit. He's holding 3,000 shares of this counter.
Yeah, it's an exit.
Federal Bank, what are the levels of 99? Continue to hold for a long-term perspective, Radharaman?
Yes, hold on.
Spandana Spurti bought at 575 by a viewer. He's asking a 2-year view. Radharaman gone through his fair share of challenges. Should he exit, book his loss, or wait for some more time?
You should hold on.
RVNL bought at the levels of 290. 540 shares is what Agnihotri is holding from a short-term perspective. Akshay, continue to hold.
Book out around 320.
SJS Enterprises bought at 1714, Akshay. And a viewer is holding 400 shares. This is Murli. Should he continue to hold for some more time, near to medium term?
Better to book out.
Union Bank, 250 shares bought at the levels of 180. Raj from Bengaluru needs the technical support for this one. Akshay?
Union Bank, the technical support for short term is 165.
Vari Renewables bought at 1731 rupees per share. Sada Sahib is asking if he should hold his 400 shares here. Radharaman?
You should hold on.
Okay, the next one is on Garden Reach Shipbuilders. Sachin from Uttarakhand wants to know from a long-term outlook, can he continue to hold at this counter? Radharaman, your view?
So you should hold on Garden Reach.
Advait Energy, is it a good buy at the current level is what Manjeet is asking. Akshay, what would you recommend?
I think it's better to wait for a dip of around 2 to 3% before fresh entry.
HDFC Bank, 3 to 6 months target on this one. Epan from Kotiam is writing us. Akshay, your view?
I think first 740, 720 is the right price point to enter the stock.
Lalita from Bangalore is holding on to Samman Capital at 185. Now, Radhaman, we've seen the announcement at 140 rupees is where the new promoter has bought in. Would you recommend her to exit or hold on for some more clarity?
Hold on.
TCS bought, at the rate of 2050 and 170 shares what Raghavan is holding, and he's bought it 6 years ago. Should he continue to hold, Radharaman?
You continue to hold, yeah.
Raj from Bangalore is asking a question on Union Bank. He's bought at 180. Akshay, what would you recommend a near-term view?
165 can be tested. There you can add more.
KPIT Tech, from a 1-year perspective, is this a good hold? 100 shares bought at the levels. The levels are not given, but 100 shares have been bought, and he's sitting on a 40% of loss. Akshay?
Exit.
Mr. Gupta from Pune is holding sale at 120 rupees per share. Radharaman, on the stock, should he continue to hold given the buying price?
I think you should book it now.
Book it now, okay.
Geo Financial Services, 3 months view on the chart, Akshay?
Positive view, possible target zone 275 to 290.
Akshay, a question for you. Aisha Motors, is it a good time to enter now with a slightly more longer term view, 9 to 12 months?
No, wait for dips till 6600, 6600.
6600, got it. Where it bounced from those levels right where we saw the end of the Israel-Iran war. So it could be an interesting level to watch. But Akshay as well as Radharaman, that's all the time that we have on this edition of the Rapid Fire as well as Ask Profit. Thanks so much for helping us solve almost 31 queries in the last half an hour and overall taking the total to almost 86 queries for the day. But viewers, that's all the time we have on this edition of the show. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday.
Welcome, you're watching India Market Open. What you're seeing on screen is more to do with expiry than any real concerns, I would say, on the index. And of course, the RBI guidelines on ECL weighing heavy on banks. Very good afternoon to all of you. You're seeing about a 90-point crack on the Nifty, staying above the 24,000 mark though. But advanced decline ratio is looking good. Sharad, this is a market that's not quite nervous but more cautious, I would say.
Exactly, and we have 3 more trading sessions in the week. But one thing, Tamanna, is the 2:1 advanced decline ratio. Look, the mid cap is still in the green, and even the small cap indices we see value buying is still happening. Of course, it's a stocks pickers market, and Q4 numbers is something which we'll be watching out for. 2 important earnings is coming, Eternal and Maruti Suzuki as well.
Yeah, actually 2 more trading sessions, Wednesday and Thursday.
Right.
Unless you're planning a trading session on Friday. Okay, let's pull up the heat map for you and look at what's happening there. Eternal, Maruti, both under a bit of pressure ahead of their numbers. Eternal, the top loser, 3.5% down. Indigo, nearly 3% down. Airlines and their association have written to the government saying we need help. Otherwise, we're going to have to start closing down routes. That's really playing out on screen. HCL Tech not looking good, nor is Axis Bank. If I'm looking at the gainers list, ONGC crude at 111 last that I saw, and we'll pull up the latest Brent prices for you. 5% up there. Adani end going strong on a day when this Google data center has been announced in the groundbreaking ceremony taking place in Visakhapatnam. Coal India, great results. Nestle, also good results. Still going through. Good results were actually last week. RL, DRL. So it's the heavyweights that are holding up.
Exactly. Speaking of heavyweights, even Reliance is holding the Nifty properly. Even Hindalco and Bharti Airtel, we see a good up move has come in. Pharma names, we are seeing a little bit of value buying coming in the last 15 to 20 odd minutes as well. But Tamanna, today is the monthly expiry for Nifty and Nifty Bank. So we should be looking at the rollover data also in some time. Yeah, the rollover data becomes very key. Let's pull up the sectoral heat map if we can, and then take a look at the broad indices as well and what's happening there. PSU banks taking a knock because RBI's new norms means they will need higher provisioning, and the way they calculate their risks changes. This is a guideline, and the banks were hoping it will happen later. They wanted a postponement. RBI saying, no, you need to do it now. Bank Nifty, private banks, all of them taking a beating. Nifty IT also under a bit of pressure. It's all in gas, energy, metals that's largely working. Small cap and mid cap, I just want to pull in the intradays to show you what the movement's been like, because mid cap... It has just turned green.
Yeah, completely flat right now, but off the day's high and very range-bound kind of trade. On the small cap as well, extremely range-bound kind of trade, but off the high entirely.
Yes, let's just pull up the BSE 500 index to show you the stocks, and after that, of course, we'll move on to the triggers also. And lastly, we see Kohan's Life, second straight day up move coming in. Uflex also a back of earnings. These stocks are doing well. Even Tamil Nadu Mercantile Bank, good commentary coming in, of course, and no guesses. ONGC and Oil India are doing well. And what's not working is, of course, the earnings impact, especially if you look at Rosari Bio, Tanla Platforms, and ahead of the earnings, Eternal is also down 3.5%.
Yeah. All right. Some of the other factors that we're looking at today and what's happening in markets. Nifty is holding on to 24,000 on expiry day. That's very, very positive. Overall, though, it's a dull day. Volumes are completely flat. The Nifty is range bound and value buying is being seen across mid and small cap names. I would say banks are the culprit of the day, largely PSU names because of those ECL norms, the new lending norms and the contingency lending norms that the RBI wants. Now here's what will happen if 24,000 breaks, and you're seeing the index hovering around those details. If 24,000 does break, 23,700 to 23,800 becomes crucial. Dips towards this zone are expected to attract some amount of value buying. The immediate hurdle now at 24,115 to 24,150. Decisive moves above this now become essential. Let me talk a bit about the Bank Nifty. It's a laggard showing indecision even during broader market recoveries. Currently, it's locked in a battle with its long-term moving averages. Support at 55,000, resistance at 56,000. We'll talk a bit about the rollover data in a bit as well, because that becomes crucial. But yeah, here you have it. That's the April rollover data coming in. 67% on the Nifty, 74% on the Bank Nifty as well. But let me go across to Sunny Agarwal very quickly before we get the rest of our conversation on. Sunny, very good afternoon to you. Would you say that Nifty expiry is weighing more heavily on the markets than any other real factor? And what are the results that you're now keeping an eye on?
Yeah, good afternoon, Tamanna. I think, yeah, definitely, I think expiry on one hand. On the other hand, we have seen that crude oil have spiked to more than $110. So that is another factor which is weighing on the benchmark indexes as we speak. And at the same time, USD INR is also under pressure as we speak. So maybe that are the few factors that is putting pressure on overall key crude oil sensitive stocks. And in terms of numbers, today my eye will be on Eternal number. So Eternal will be declaring the result. Maruti again market leader on passenger vehicle side. So that's an important number to track during the day. So these are the two numbers which I would like to track as the day progresses.
Right, Sunny, good afternoon. Sharad here. Of course, auto numbers will also be coming out in the coming days as well. this sector, of course, looking, especially in the fundamental portion, it's out of touch right now from the markets. We saw that last month also in the sell-off. But is there any value emerging in the auto sector?
Yeah, within auto sector, what we feel is that the two-wheeler as a pack may continue to do well going forward. So what we believe is that iShare post GST rationalization, in fact, their 350 and CC and above portfolio has seen some dent in terms of volume growth post increase in GST during the GST rationalization phase. And now that portfolio is back on track. International territory continue to do perform well in terms of volume growth. So iShare Motor is the one stock which we feel can be an outperformer going forward. TVS Motor, no doubt, I mean all the three segments, whether it is an ICE, whether it is an electric two-wheeler segment as well as three-wheeler segment, also continue to deliver a strong set of numbers. So TVS Motor again is a one stock which we feel that can be added on. As we speak, there are some concerns on El Nino, which can have some impact on tractor volume growth, which has been a clear-cut strong outperformer during FY26. So that is the reason we are seeing that stocks like M&M or for that matter, tractor-related companies like Escort or Swaraj engines are under pressure as we speak. Commercial vehicle, on other hand, there is an expectation that post-election there can be some spike in diesel price, and that can lead to some postponement on demand on commercial vehicle side. So again, that pack is under pressure as we speak. So I think two-wheeler seems to be relatively well placed as we progress ahead towards the monsoon over the period of next 2
Yeah, that's interesting because you're one of the few voices who is positive on autos today, Sunny. A lot of people we've been speaking to have worries about second-order effects on the entire space because of the West Asia war, etc. But I'm going to focus on Eternal. You started this conversation by saying that Eternal is something that you're looking at. It's set to release its Q4 numbers. Also important in terms of the commentary from the management, because this is Albinder Dhinsa solo, right, who's running Eternal now. What is the street expecting? Mahima is joining in for more on that. Mahima.
Basically, the expectation is that overall, in terms of demand recovery and revenue growth, that is mainly going to come from Blinkit. The expectations are also that margins might see a slight uptick this quarter. Now, overall, in terms of the growth numbers on year-on-year basis, revenue might see an uptick of over 2 times. EBITDA might see a growth of 5x, and margins might be at 2.4% versus that of around 1.3 odd %. This is the analyst estimates, Bloomberg estimates suggesting this number, and profit might see a jump of 2 times as well. Now, in terms of what to expect, steady improvement in net order value growth is something that all the analysts are penciling in. Double digit both in terms of your food delivery as well as Blinkit on year-on-year basis. High double digit for Blinkit and low double digit for food delivery. Kotak has forecasted that Blinkit store could reach to that 2,200 number mark. That means around net addition of 173 dark stores this quarter. Morgan Stanley, however, says that quick commerce revenue and profitability forecast might be subdued because of competition also coming in because of higher discounting, and Blinkit is the only platform which has gone ahead and increased their handling charges as well. In terms of key things to watch out for, I think whether Blinkit will be able to sustain the high growth that it has done in the last quarters or not. High platform fees and competition, how is that dynamics faring out? And plus, this is the first quarter after Albinder has actually taken up the role as a group CEO, so we'll have to watch out for as to what his comments are going forward as well. So this is the overall view of what you can expect from Eternal's Q4 earnings.
Okay, let's watch out for Eternal. A bit of pressure on the stock before the earnings. I must say about 3.5% down right now. Vinay Rajani joining us this afternoon. He's CMT, Senior Technical and Derivatives Analyst at HDFC Securities. Vinay, very good afternoon to you. Let's get a Nifty and Bank Nifty view first.
Yeah, so Nifty is into consolidation for last since morning. We can see that it is finding resistance, and it is 50 days exponential moving average, which is placed around 24,200. So it's just a consolidation, but overall we feel that the way rotation is happening in many sectors, some sectors like power and oil exploration companies are moving very well today. So it is just a consolidation. We can say the primary trend on the upside. Yesterday's move was quite very good, and yes, this 24,200 is the short-term resistance. Once that is taken out, then we can expect a 300 to 400 points upside on the upside, and 23,800 is a very strong support for the Nifty. So traders should continue to hold on to the long position with the stop loss of 23,800.
Right, of course, interesting views coming in from Vinay, but PSU banks, that's the sector of the day. We have been talking about it. The Nifty PSU bank index has fallen more than 1% and is the biggest loser on a sectoral basis. But what are the key reasons for it? And I'm going to, of course, point out the most important reason is the RBI's ECL norms, which is impacting the sentiment. Of course, the technicals have also turned weaker. We'll get to know a little bit more about that. And valuations have seen run up lately. That's also a concern for the PSU banking space. And analysts say this may be profit booking, but ECL actually means expected credit loss. And what is the actual impact, especially on the PSU banking front? There's a more impact than private banks. Now, these banks have to create further provisions. The private banks already create contingencies, but largely the PSU banks don't. And now they need to create more provisions. And when more provisions are created, let's see the other key reasons. What can be impacted? The first would be the one-time impact, around 5 to 10% of the net worth. That's, of course, a negative. Also, apart from this, the cost of fund, that's expected to go up. The normalized credit cost, that is expected to go up by 20 to 25 basis points for the PSU banks. And brokerages have stated that the PSU banks would be a higher impact. But I did a yearly chart of returns of public sector banks and the private banks in their indices. Each year, look at that. 2026, it's still positive despite the volatility. The private banking index is down 8%, and the last 3 years also the story remains the same, a stark outperformance and the valuations going up when it comes to the public sector banks. 2023, look at that, 2024, 14%, 2025, 30%. So this has given so strong returns over the last 4 to 5 years and 5-year average of 38%. But let's look at the valuations, what happens, and that's a concern coming in. Almost Canara Bank, that's almost 2.5 times price to book. So yes, the valuations of PSU banks are on the expensive side. And let's see the return potential to give you the entire perspective on the PSU banks of how things are moving. And largely it's around 12 to 15% for the next 12 odd months. Sunny, I just want to get you on this. First of all, the impact, especially on the PSU banking front. This is, of course, adverse impact coming in. But in this space, any choice which is there, would you like to talk about it? Of course, we cannot talk about SBI, but apart from that, any other companies in the PSU banking space which is attractive at these levels?
Within a PSU basket, what we feel is that Bank of Maharashtra has been consistently delivering a very solid set of numbers. In fact, this quarter 4 was also very blockbuster for Bank of Maharashtra. But again, we have seen a very strong run-up post declaration of numbers. So maybe Bioon is the right strategy as far as Bank of Maharashtra is concerned. And with regards to this ECL provision, what we feel is that Indian Bank has already been providing for this ECL related thing. So I think they are relatively protected in terms of making provision beginning from 1st April 2027 onwards. So I think Indian Bank seems to be very well provided for ECL norms which will kick in from 1st of April. So Indian Bank, again, here also Bioon is the right strategy, as we have seen a very strong run up during the last 1.5 to 2 years in the stock price.
Okay, let's get your take as well, Vinay, on what are your picks on the banking space?
Yeah, so yes, Bank of Maharashtra from the PSU banking is the strongest. Technically, it is trading near its 52-week high, and it has been resilient and has been outperforming the entire PSU banking space. So there has been many divergences we can see in the PSU banking space, and Bank of Maharashtra is one of the strongest technical setup we can say. So this is looking the strongest. And yes, in the private sector banks, we have recently seen a good strength coming to the Karnataka Bank as well as the Federal Bank as well as Bandhan Bank. So small private banks are really outperforming the larger private banks. So as of now, these stocks are looking relatively stronger. But overall, I feel that there has been some selling, there has been some negativity, and sentiments have turned negative in the recent past in these rate sensitive sectors. So we are a bit cautious there in the banking, NBFC, auto and real estate from this particular level. So it might happen that the power, the energy, the oil exploration companies and metal companies can continue to do well in the coming times, and this rate sensitive sectors will remain under pressure.
Sensitive sectors might remain under pressure, but just pull up the Maruti Suzuki's chart, and The net profit, it seems like it has come in at almost 3,591 crore rupees. It's below the street estimate, but interestingly, the revenue has been a slight beat coming in. These are the initial numbers we are talking about. Revenue coming in at roughly at 52,449 crore rupees, and the estimate was set at almost 50,385 crore rupees. But net profit, it seems like there is a bigger miss, at least more than 8 to 10% of what the analyst community were expecting, and we have also taken our own estimate as well. So it seems like there might be some one-offs as well. To put that in perspective, we'll get you more details. And yes, it's the day's low of the sharp fall coming, and just that 13,000 odd. Actually, it has come below that. Tamanna, interesting development coming in for Maruti Suzuki at this time, where the auto sector is not in vogue right now.
I think what we want to wait and watch are the margin figures. You'll see that on your screen very quickly as we continue to calculate them. But yes, there is a sharp fall here. Remember, when we were talking about pressure in the auto sector, sentimentally it is for what is going to happen from here on. Which is because of the West Asia crisis. The numbers you're seeing is actually for Q4 and for the full year of the financial year of 2026. So that would still not factor in all of the problems that could come through. Having said that, you're seeing a 2% knock on the stock right now. I want to just pull up some of those numbers on your screen as well, if we can, as we're going through them. Those are the numbers we have right now. EBITDA is actually slightly better than estimates at 6,167 crores versus our estimate of 5,967 crores. Revenues are also slightly better than estimates, but not all the metrics have come out positively, and we should look at a few more of those figures. The net profit is actually a tad lower, and that is what we have been seeing on your screen. Do we have Dhruv Joshi, research analyst at Mirae Asset Sharekhan? We can go to him very quickly for his first cut. Dhruv, how are you looking at the Maruti numbers?
Yeah, hi, thanks for having me. Numbers on the top line seem pretty much what we were expecting, but it's been a miss on the net profit. Still having a first glance at the numbers, just having a make through. I mean, we were expecting around 4,000 crores out of revenue, but the revenues have come in a little lower on the net profit side. So just having a first glance here.
Now, Dhruv, we're going to give you a couple of seconds because I'm sure you want to go through those numbers in a bit of detail. I'm going across to Puneet very quickly. He tracks auto for us and looks at this closely. Puneet, the margin numbers seem to be completely flat.
Well, thank you for that. Well, as you rightly mentioned, the margins coming at 11.7%. Now, it is something that has been one of the key aspects to watch because there has been a lot of commodity headwind for the company, but bang in line with the estimate of 11.7 that we were working with, and revenue as well as EBITDA has come in line. Profit has been a slight miss, or roughly a 500 crore miss, and that's largely because of the other income component that has substantially gone down. So it's come in at roughly around 499 crores versus 1500 crores last year. So what Maruti generally does is Q4 is when a lot of those investments are looked at, and hence this is very similar to what happened in Q4 of FY25, where there was also an other income component that had been slightly more different compared to the same time last year. So barring that, the numbers seem to be very in line with estimates. There was a 12% growth in terms of the overall sales and volumes for this particular quarter, and hence that is reflected in the stronger revenue profile. So we were working with a number of 50,800 odd crores. It's coming at 52,000 crores. So hence this could be one of the key reasons that the realization is also improved. Larger sales of SUV compared to smaller cars has been the other key aspect that will benefit that, and hence margins at 11.7% will be something that the street will take with both hands at this point of time. The only clarification coming in from the media and the analyst call will be what's happened actually for commodities specifically in the month of April and March specifically, because you were expecting Q4 margins to be largely okay. Q1 margins will be crucial yet again, and the ramp up of the electric vehicle venture, which has been very slow. So those will be some of the key aspects to watch. But in terms of results, while the stock's down right now almost 2%, numbers in line with the estimates as well as 11.7% margins will be something which has been very positively taken over in the medium term.
Not really immediately. The immediate reaction to the numbers isn't very positive. Dhruv, you've spent a few minutes looking at it, and we call this the first cut because our viewers also know that this is the very first cut. We will come back with more analysis, but what are the highlights as you are seeing right now?
So the numbers pretty much in line with our expectations as well. So 52,000 crores kind of number from the top line is in line with what we were expecting, about 51,800. And rightly mentioned, it's the other income that's been a miss over here, which is taking a big impact, a big chunk out of the net profitability. So otherwise, I think overall the numbers look pretty much in line with what the street was expecting. And what we were expecting as well.
From the inline numbers which have come in, of course, there might be a concern on the margin pressure which might come in the first quarter itself. Of course, we have understanding that there might be some price hikes also in the offering in the coming time. How do you see that developing?
Yeah, so for this quarter, at least we're not expecting any on the margins from the geopolitical pressures that we were witnessing since the start of March. But going forward on from the first quarter or the second quarter onwards, we could see some dips in margins, primarily on the raw material cost side. So we factored in about 12.5% for EBITDA margin, but it's expected to be somewhat lower going forward as well. For the quarter, we were expecting about 12%. It's coming at around 11.5%, which isn't a big of a miss. So we'll take that any day. And coming to net profitability, I mean, it continue to be in the same part, primarily because of the rise in realizations where we see exports contributing a little higher to their overall sales now.
Okay. So what is the call on Maruti right now? If any of our viewers own it, should they hold it? If they don't own it, is this a buying opportunity with a slight dip we're seeing?
It's definitely a buying opportunity, and anyone who actually holds this can continue to hold it, because the way the company is moving ahead with all its future plans, its expansions, we've already seen that they are pretty much close to their full utilizations of their current plants. Along with that, with the move to have their margin capacity being expanded to around another a total of 30 million units. So that could be another positive for the company, because it's at the moment limited by its capacities. So even if we look at the presentation that the parent made going forward, they have huge plans for Maruti Suzuki. So not anything at the moment negative.
Okay, so it's a buy on dip call coming in from Dhruv. Thank you very much, Dhruv. It's always a pleasure to talk with you. But just a question, Sunny, for you. For this Maruti Suzuki, largely inline set of numbers coming in, and a minor recovery from days low also coming in. There was a buy on dip call coming in from the street. You agree with this?
Yeah, definitely. I think inline set of number, and the concerns on margins are something which will be a key monitorable during the earnings call. But I think the management has got some levers to offset the increase in inflationary pressure through cutting discount or taking a price hike. So let's see how earnings call shape up. But overall, seems inline set of number, buy on dip is the right strategy if somebody is a long-term investor.
Vinay, on the technicals for Maruti Suzuki?
Maruti is trading below its 20, 50 and 100 as well as 200 days exponential average, and 50 days exponential is trading below 200 days exponential average. So momentum theory and these moving average setups are quite weak on the charts. And as I said previously, that we are cautious on the rate sensitive sector. So it is looking a bit on the weaker side for the short term on the short term chart. So it's better to find opportunities in other sectors where we can generate the alpha. So I would rather avoid for trading in long side in the Maruti.
Okay. All right. Stay on with us. Let's go across now to Samit Sarkar for that time in the show where we talk about all the chatter from the dealing room. Samit, what are you picking up today?
Well, host of stocks that remain in focus. Firstly, it's ABB India. Now, there are sell flows on the large HNI desk is what dealers are indicating, and this is largely because on anticipation of weak first quarter of FY27 earnings, that is the June ended quarter earnings, that is expected to be weaker for ABB, plus valuations are now on the expensive side for this counter. When it comes to a couple of EMS names, Amber Enterprises and Dixon Tech, there are buy flows on PMS desk. Street is anticipating that the JV approval for each of these companies that they have, Amber is with Oppo and I guess Dixon is with Vivo. Both these approvals are expected to come in anytime soon. For Glenmark Pharma, there are buy flows on institutional desk. Dealers are expecting strong Q4 earnings to come in from this counter. And when it comes to Vari Energies, there are buy flows on the HNI desk. Now, obviously, the company will be reporting its numbers and that are expected to be on the stronger side. But along with that, the street is expecting that the company might unveil some long-term growth targets very soon. And that is one of the reasons why we are seeing these buy flows coming in. And lastly, when it comes to Adani Enterprises, there are buy flows on institutional desk. A Nifty rebalancing is expected to happen very soon because the partly paid shares of Adani Enterprises will become now fully paid, which could lead to some higher weightage on the Nifty 50 index. These passive flows are expected to come in Adani Enterprises.
Okay, thank you for that. That's not just chatter from the dealing room. You can hear the chatter in the newsroom also behind Sumit as we wind down. So for the day's trade, so the NDTV Profit newsroom buzz there behind Sumit Sarkar. All right, here's what's buzzing in the markets. Cohan's Life, another 15% up. Sunny, I have to ask you what you make of Cohan's Life. Nothing has happened in this except the announcement of Umang Bora taking over. And the stock was already at 20% higher. You should pull up the 5-day chart. It'll show you what's been happening in Cohan's Life. It'll be about a 30% pop in the last 2 days. Would you still look at this favorably? Sunny?
Yeah, as you rightly pointed out, post appointment of new CEO, the stock has run up significantly. I mean, I don't see any other fundamental reason why stock has run up post appointment of new CEO. Maybe buy on dip is the right strategy, but again, I would like to wait for these quarter numbers and then take a call on Cohan's. Yeah.
It's almost 2 days and the stock is up 35%. Everybody talking about it. But Vinay, you were talking about the power segment, the power and the transmission segment, and that is where a lot of interest is coming in the markets also. Do you think most of them have actually run up of their fundamentals, especially on the technical front? I would like to talk about, or is there anything on the charts, especially on the power segment? Since it's summer and even I'm sweating because of that, but anything there on the power segment?
Yeah, so definitely it is into a continuation of an uptrend. Breakout was there 2 months back, and after that, most of the stocks have run up a lot. Like Hitachi Energy has run up a lot. Many stocks participated very well, and still they are into continuation. So better not to anticipate any talk, but yes, we will. We are recommending our clients to hold on to the long position. Still, there are some technical setups in some stocks of the power segment are looking stronger. So like NTPC, Power Grid are still looking strong on the chart. Tata Power is one of the stocks which is looking extremely strong. So still looking at the chart, I feel that there is an upside left, and one should remain with the relatively higher strength is there. So that's why we are recommending to hold on to the long position. So NTPC, Power Grid, and Tata Power. These are the 3 stocks we like technically in this particular segment, and we expect them to outperform in the coming days as well.
Okay, power in focus as well. All right, another set of counters in focus are some pharma counters. Astellas has settled with MSN Laboratories, clearing the path for an imminent US generic launch of a product called Mirabegron. The move sharply accelerates competition, putting earnings at risk for Indian players like Zidus Life Sciences and Lupin. That's really the companies in focus and the stocks in focus this afternoon. These are raising concerns over faster price erosion across the sector. Let me go across to Varsha for more details on this. Varsha.
Well, this case relates to a drug which treats overactive bladder. Now, the case is the Astellas, which is again a MNC pharma company, has settled with MSN, confirming imminent US generic Mirabegron launch in a very easy language. Now, the generic version of Mirabegron will come into picture, which will accelerate price erosion and competitive entry in US market. Now, do remember that Mirabegron was a lower limited competition product and high margin product. Now, a lot of generics will come into picture. Talking about the Zidus Life Sciences, which will have a highest risk because Mirabegron contributed almost 20% to their FY26 EBITDA. To 20% of EBITDA is now under pressure because of this amendment, which will significant to 20% of EBITDA is now under pressure because of this amendment, which will significant have a downside to FY27 earning forecast. Talking about Lupin, the contribution is meaningful, but of course lower than Zidus, because Mira background contributed low double-digit percentage to overall EBITDA. Earnings impact is visible, but of course less severe than Zidus, and FY27 profit estimates are likely to be cut. Overall impact on Indian pharma, if I were to talk about, high margin, limited competition generic will turn into a crowded market. MSN launch sets precedent for rapid multiplayer entry. Alkem, Aurobindo already have got US FDA approvals for this product, and faster entry means steeper price erosion and margin compression. So overall, the variety of drugs or the generic drugs will come into picture, which will have pricing erosion, and hence you are seeing Zidus and Lupin stock under pressure.
Okay, actually you're seeing a fair bit of pressure there on both Zidus and Lupin, even while the rest of the pharma pack is doing quite okay, whether it's a Cohance, of course for reasons or its own. I want to pull up a Sun Pharma also. Sun Pharma is also not doing too badly today. Glen Pharmaceuticals is doing well, as is Granules. Vinay Rajani, I want to ask you about a couple of stocks before we let you go. One is Eternal. Want your view on Eternal, want your view on SBI cards as well. Sunny, don't worry, I won't ask you about it. But if you could tell us on the charts on Eternal and SBI cards.
Yeah, so Eternal has been correcting for last 4 trading session. I think it is due for the result, and that's why the movement is like that. But the higher top, higher bottom formation is there on the daily chart. So there is a strong support near 240 odd level. We need to see whether that is holding or not. So those who are holding the trading long position should hold the long position with a 240 stop loss. So that is the overall view on the Eternal. As far as SBI card is concerned, SBI card has been into a primary downtrend. It has been one of the underperformers, and we need to see whether the recent swing low of 615 is being held or not. So whatever long positions are there should be protected with a stop loss of 615. The primary trend is clearly down with a lower top, lower bottom. So the trend is not that much into favor of the bull. So better to remain with risk compliant, and 615 should be the stop loss in SBI card.
Okay, just want to take a very quick break. Vinay Rajani, Sunny Agarwal, thank you so much for joining us. But I want to recap for you, before we go into the break, what Maruti Suzuki is saying, because their commentary becomes very, very crucial. And if you can please pull that up for you. They're talking about higher commodity costs. This is the first thing. They're saying they've recorded their highest ever quarterly sales in Q4, amongst other things. Their sales, though, were restricted by limitations in production capacity. The adverse commodity prices have also hit their margins in Q4. Q4 exports at an all-time high of 1.37 lakh units as well. But this fact that high manufacturing expenses have hit margin is something that is perhaps weighing on the stock, along with the commentary that sales have been restricted by limitations in production capacity. These are going to be pain points. We will, of course, be speaking with the management. You'll hear their interview on NDTV Profit tomorrow morning, and we'll hear from their conference also in a short while. We'll take a very short break. We're coming back with the top BTST ideas as we go into the closing session. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show. that the market watches. What Sharad we
Welcome back to India Market Close, and looking at the markets, there is a slight recovery. Let's just pull out Nifty and Nifty Bank from the day's low. A little bit of move coming in support levels. Nifty still at 24,000 levels is something where it's moving at, but largely the triggers are lesser in this market. But nevertheless, joining us, we are having Milan Vaishnav, founder and technical analyst at Gemstone Equity Research, Chart Wizard, and Avinash Gorashkar, founder and head of research at Avinash Mentor Research. Good afternoon, Avinash. It's always a pleasure to have you. And of course, we have seen the numbers coming in from Maruti Suzuki and important commentary also coming in. But in the auto space itself, the view has been that the two-wheeler might create a little bit of alpha coming in. But anything in the auto ancillary which you are looking at, because auto ancillaries have done really well, especially on the exports front. Anything on your radar on that?
I think, Sharad, good afternoon. I think clearly within the auto component space, we are positive on companies like Sundaram Fasteners, Lumax Industries, Bharat Forge, Uno Minda. I think these are, companies where they will benefit from a larger traction seen in the passenger car, the two-wheeler kind of sector. And I think clearly, I think this quarter is going to be good. The first quarter starting April onwards is also going to be solid. Although there have been, some instances where demand is expected to grow strong, but margins could come under pressure as commodity prices have risen. And with the rising crude oil prices, there is some concern in the markets. But I think, demand on ground continues to be very rock solid, especially for the two-wheeler players. And I heard Maruti management saying that this was possibly the best quarter 4 number for them. So I think clearly in terms of numbers, in terms of demand, the outlook continues to be good. And till that time, I think most of these auto component companies will benefit from a rise, from an increased volume push. So I think let's wait and watch for these numbers. I think most of these auto component numbers are yet to be out. But once the management commentary is out and they share their outlook on the business and the margins, I think you would get a better sense as how the business is going to pan out over the next, say, 6 to 12 months.
Okay. Avinash, stay with us. Milan, stay with us. Breaking story coming in on NDTV Profit in the Alco Bev space. We're learning that United Breweries has raised beer prices in Maharashtra, citing sharp increase in packaging, aluminum and logistics costs. Going across to Ridhima for more on the story. Yes, Ridhima.
So the United Breweries has taken a price increase for the beer in Maharashtra amid rising input costs. They have increased the prices for the brands like Kingfisher, London Pilsner and Heineken by rupees 5 to 10. Now the bottle prices for the beer have increased by 10 and can prices have increased by 5 rupees. Now other states are also in the talks to increase prices as per the distributors. Now let's understand that a lot of state governments have a say in the prices for the alco beverage companies, so they can't really take a price on their own. They have to take permission from the government. These states are more, these rules are more relaxed for states like Maharashtra, UP, Goa and other northeastern states. Now the associations have already reached out to government to take a price increase from past month when this war began. Now the main reasons behind the price increase is first the packaging costs, which have risen by 30 to 40% after the Middle East conflict, and the main packaging materials like glass, cans and plastic cap prices have increased. Glass prices have risen by 12% in April, and cans have also taken a price increase, with aluminium prices rising by 10% in April, and also can shortage which was reported in the past few days. And polypropylene, which is the plastic caps used on beers, have also increased by 30%. And also the logistic and energy costs have risen by 10%, which has led to the pressure of increasing prices. We reached out to United Breweries. They haven't responded to our queries. And analysts say that this price increase is not enough and margins are likely to be hurt in the short term. And they say that only 20% of the inflation has been taken care of with this price increase. And they expect a further price to be increased in the coming time. And when and how much with that happens, that's something we need to wait and watch.
All right. Thanks a lot, Ridhima, for that interesting development coming in when it comes to the brewery-related stocks.
If the Diet Coke drinkers will suffer, even the beer drinkers must suffer.
Exactly. Both is expensive. I think, Tamanna, it's 50 rupees right now from 40 rupees.
For Diet Coke? Yes, prices have gone up. And forget that, the availability is short.
That's right. And they're selling it in cartons, I guess, like 6 packs. Well, that's pretty much interesting. But Avinash, just wanted to get your perspective. I think Milan has also joined in. Good afternoon, Milan. Of course, we'll ask about the brewery-related stocks. But first, key levels to watch out for both Nifty and Nifty Bank. And of course, the rollover data, what is it suggesting for the new series? Hi, Milan.
Sorry.
Yeah.
I thought the question is for Avinash.
No, it's for you. Yes.
Nifty, no problem. Nifty, I believe, is still within the broad range that I had mentioned a couple of days ago. That is 23,800 on the lower side and 24,500 on the higher side. We are still tracked very much within this range, that is point 1. Now, coming to the expiry specific trade, we have most immediate resistance on Nifty on closing basis is at around 24,200. That's where the 50 DMA is placed. And for the entire day today, we had seen concentration of maximum call or that strike. So it was by and large taken that we will not go above that point. But what I see here that maximum call has shifted higher to 24,500 for the next week. And 24,500 is a place where the 100-week moving average is there. If you zoom out a bit and take a little bit of a longer term view, then I think that 24,200 to 24,300, these 300 points, navigating these 300 points would be not an easy task for Nifty, and we can see some sustainable trend on the upside only after the Nifty goes about 24,500.
All right, that's a pretty interesting take coming in, especially on the volumes front, and of course we are expecting that there might be a little bit of rollover numbers might be on the lower side. Avinash, we are discussing about the brewery-related stocks, and interestingly, there's a news flow that there might be a price hike coming in because of higher input costs. Avinash, how do you see this developing, especially for United Breweries?
I think, Sharad, clearly commodity prices having risen, this price increase was expected, and I think considering the fact that aluminum prices have increased sharply, I think this price increase is going to partly compensate for the cost increase. My sense is it won't be difficult for the brewery companies to increase prices further, provided the volume growth remains pretty good. I think we have seen strong numbers coming for the last couple of quarters from the liquor and brewery companies. So I think demand continues to be good. Whenever a price increase is announced, there is some demand compression. But I think looking at the kind of consumption trends and the kind of brand presence which United Breweries enjoy, I wouldn't be surprised that this increase, if it is staggered and if it comes in bits and phases, then I think the markets will absorb it. Maybe you will see the full impact of that coming post-September, but maybe the first 1 or 2 quarters could possibly be a little margin decreasing. You could see a little bit of pressure because the entire cost push could not be recovered maybe in the first 2 quarters. But post-September, I think things should get better.
Okay. The other space which is feeling the heat and the brunt really of the West Asia crisis is the airline industry, right? The Federation of Indian Airlines has flagged an aviation crisis, warning soaring ATF prices and high crack spreads in an April 26 letter. FIA says the West Asia war has worsened condition, pushing Indian carriers into extreme stress. My colleague Danish is here with more details. Danish, the language of the letter shows a lot of pressure, isn't it?
That's true. FIS signaled SOS to the government, and this is coming at that point in time. In the letter, FIS completely stated to the government that due to the crack spread widening, and as per the previous calculation that was there between 2022 to 2025, FIA believes that it was more transparent, and this crack spread difference was in a range of between $12 to $22 per barrel. But now, since we are seeing that the Brent prices have crossed $100 per barrel, it is creating an impact on this particular crack spread. So which basically means that the airlines have to pay more for uplifting ATF in their aircraft. As far as the relief is concerned, government has given them a cushion only for the domestic ATF. But even right now, if any airline has to fly abroad, they have to pay at least minimum $1,000 per kiloliter for uplifting fuel in their aircraft. So this is very surprising, and this is a very surprising for the entire aviation industry, as at the moment they're expecting more support from the government, and they've clearly highlighted that just 4 days before the May revision of ATF, FIA stated that because of the crack spread widening, it is not viable for any airline to continue operations. So they have signaled to the government that they require some more support. In fact, earlier in the day, we had also reported that airlines are planning to reschedule certain flights and cut certain flights. And this FI letter has come at that point in time when they're clearly signaling distress to the government, and they want some or the other support from the government. They have highlighted that if OMCs are being cushioned, why not the aviation industry should be cushioned from this price shock?
What is
So
the reaction? You reported this. One sec,
Danish.
I have a couple of questions. I have a couple of questions for you. For one, can you please explain to our viewers what is crack spreads? You've used that term a couple of times. I used it as well. But in the aviation industry parlance, what exactly is crack spreads?
So basically, OMCs, they get crude in a barrel form, and when they process it, they make final products. So this crack spread is basically the final amount that is supposed to come out after taking the doing the plus and minus as far as what was the crude output and at what price did the crude was bought by the OMC, and when they are processing it into ATF. So that difference is basically the crack spread. And as per the old calculation, the government and the airlines came to a conclusion that the crack spread will never widen from between $12 to $22 per barrel. So that is where the crack spread thing is concerned. But this particular crack spread is now stretching beyond $22 per barrel, which is kind of becoming uncomfortable for the airlines.
Morning, you broke a story on NDTV Profit where you talked about airlines shortlisting and mulling routes that they would rationalize, maybe reduce flights in those routes, shut some routes for some time if the ATF prices keep going up. Is this something that has also been communicated to the government by the FIA?
They have kind of communicated to the government that if there is no support from the government, it might lead to cancellation of flights. So like the letter clearly states that it is literally a SOS kind of a support that they are seeking from the government, and they have indicated that if the ATF revision in May is much steeper, then it could lead to certain some strong events happening in the aviation industry, in which we might see big players also announcing a big number of cancellation of flights.
Okay, stay on with us, or actually thank you for that, Danish. We're getting to the eternal numbers. It's a power-packed show this afternoon. India market close. Eternal numbers out. Net profit at 174 crores. Higher than estimates. That's the first cut coming in. We're waiting for more details of those numbers. The first number we have, net profit beating estimates by a mile. Let's pull up the intraday chart of Eternal also while we are at it. Revenues at 17,292 crores. That's slightly lower than estimates. The revenue number seems to be a bit soft right now. We're going to get Mahima up for the first cut in just a second from now. But Avinash, even as we get more details on the numbers, and they will be flashing on your screen, what are you looking for when it comes to Eternal? What will you be focusing on?
No, I think, Tamanna, when the top line has not come in as per expected, I think one would like to know what's the kind of operational, profit, operational EBITDA, and most importantly, whether there is any element of other income or any exceptional gain. I think that would be important. And finally, what kind of volume growth has the company achieved in terms of the gross revenue? My sense is that markets would be happy to know from the management what kind of throughput has happened and what is the kind of outlook going forward. But if there is some exceptional income, then I think the markets would not like it. If these are operational earnings, then definitely this is a good kind of a beat which the markets would obviously appreciate.
Is at 486 crores versus estimates of 431 crores. So some of those numbers trickling in. We have to see what kind of a move there has really been in terms of the actual numbers versus Q on Q. You're seeing a slight uptick in the stock even as we speak. The net profit is a beat on estimates as per our estimates, and we'll get that comparative figure for you as well. In fact, Mahima joining us with the first cut on Eternal. Mahima, take us through the numbers.
Right, Tamanna. So, as you rightly mentioned, net profit is certainly a beat as compared to where the estimates are concerned. Top line, however, is a miss. The expectation was around 18,000 odd crore, but it has come in at that 17,200 odd crore. We'll have to, figure out as to where that miss is coming in from exactly. And whether food delivery business is something that has probably impacted the top line growth or not. But overall, in terms of net profit, it's certainly a beat at that 174 odd crore as compared to what the street was expecting. In terms of the segmental performance as well. Overall, the food delivery business has seen a minor growth of 700 odd crores from that 2,000 odd crore to 2,700 odd crores. Hyperpure has seen a degrowth this quarter from 1,800 crore to almost 978 crore. So I think this has taken a hit. So probably that's the hit coming in on top line, because analysts were estimating a better growth when it comes to Hyperpure, which has been growing at a very fast pace. In terms of quick commerce, that is Blinkit, that has seen a significant growth coming in from a 1,700 crore to almost a 13,200 odd crore, and this was expected as well with the way competition has fared. At the same time, with the aggressive dark store addition that Eternal has been doing for Blinkit, this growth was expected. And lastly, in terms of the going out business, slight uptick there as well from a 229 crore to 277 crore. So overall, I think net profit, of course, this is just the first cut. We'll have to wait for the press release as well as the shareholder statement. But I think a beat coming in terms of quick commerce and slight beat in terms of the food delivery business. But Hyperpure business is something which has gotten impact and probably hampered the top line growth as well this quarter. And her top line is a miss in terms of beat, but profit is definitely a beat.
So profit is a beat on Eternal, and we are seeing a good recovery coming in as well. Joining us is Mayuresh Joshi, Head of Research at MarketSmith. Good afternoon, Mayuresh. First cut, initial study on Eternal. What's your view on it? We are seeing a good recovery from day's low.
I think numbers in terms of earnings delivery, both in terms of quick commerce and food delivery to a large extent, is in line with estimates. I'm just going through the shareholders' letter. I think it's a large letter. But I think the indications here are probably justifying the kind of growth dynamic that the numbers have pointed out, both in terms of transacting customers sequentially, whether it's the food delivery business or the quick commerce business as I'm seeing it. The net order value has probably come off a tad bit as far as the quick commerce business is concerned. But the transacting customers in quick commerce has gone up quite significantly, and that's the reason where you're seeing the revenue and an absolute EBITDA probably come much higher. But in terms of margins, I think more or less in terms of expected line.
The numbers at the face of it, and I know, Mayuresh, you're also reading while we're speaking because we are doing a first cut. Some of the numbers are optically looking very good. EBITDA at 486 crores versus 72 crores year on year. That's looking robust. Net profit at 174 crores versus 39 crores year on year. Revenues have also grown at 17,292 crores versus 5,833 crores. India food and delivery volumes have grown 33%, but the massive growth seems to be definitely in the dark store or the quick commerce segment. So that's going to be important as well. In terms of margins, you're at 2.8% versus 1.2%. Mahima, just, even as Mayuresh is looking through the shareholders' note, we want to give him a couple of seconds to do that. And while he is doing that, overall, it seems as if they have swung to robust profitability, and the champion, as always, is the quick commerce business.
Absolutely, Tamanna. So overall, if you take a look at the operational metrics as well from the shareholder letter, in terms of the food delivery business, the net order value has seen a growth of 19% year-on-year basis, and the expectation was that this will come around 13-14%. So that's a good beat. The net order value growth for quick commerce, that is Blinkit, that is coming at 95%. Here the expectation was around 99%, slightly less than that, but overall 95% is also a good growth. Going out business has seen overall growth of 47%, and hyperpure business has seen a degrowth of 47%. But overall, I think even margins, Tamanna, is a beat. The expectation was that margins will come around that 2.4 or 2.5% mark as per analysts, but it is coming at 2.8% mark. But the question really here is whether how sustainable are those 2.8% margins, because they're still very bullish when it comes to these dark store additions, plus the newer dark store additions that they've made. As to how break even will be achieved for these dark stores is also a question mark, and that will probably hamper the margins as well. But most certainly good numbers when it comes to bottom line as well as margin expansion for the business as a whole.
Thanks a lot, Mahima, for that. We'll be getting you finer details. But Mayuresh, apart from quick commerce, also the going out, the district numbers also I'm looking at. Even though the base is small, the net order value, that has also doubled from here. And even Hyperpure, the restaurant supply business, that is also doing well. And we can see that the management commentary, they haven't given any number for the outlook as of now. But nevertheless, they are very bullish and on the growth prospects of it. Mayuresh, if you are reading from the shareholders' letter, what are the new inferences coming out from that?
No, so I think the bottom line is that quick commerce has done exceptionally well, as we are reading through the letter, both in terms of the number of transacting customers, which have shown a huge increase, both on a quarter-on-quarter basis, year-on-year, whichever metrics you want to probably look at. So I think that is one number which has shown a massive increase, which is probably led to the average NOV per day per store orders actually increasing. However, I think the order value has probably come down a tad bit, but that should be an adjusting factor as we head ahead. So I think quick commerce dynamics in terms of most parameters looking extremely strong and robust. Food delivery, I think the kind of expectation that one really has. They have shown a steady state growth in the previous 3 quarters. So I think it's been a steady increase in terms of the transacting customers, which has probably led also to better numbers as we speak in terms of the absolute margins that have probably come through. Outside that, yes, I think a small base in terms of going out. The kind of margins are probably getting better as we speak every passing quarter, and it's to be seen in the next few quarters, looking at competition, how this will play out. Hyperpure is a definite miss as we speak.
Yes, thanks a lot. Thanks a lot, Mayuresh, for your views on Eternal. And just look at the stock. The stock has turned green from the day's low. The stock has given up almost you could say 4% up move from the day's low. Avinash, I just want to get your view also on this. There's a margin guidance they have given, adjusted EBITDA between 5 to 6% for Blinkit. It seems like that's higher than what the street was estimating. But Avinash, how do you see this development going on? Now it's in the green, the stock.
So I think, Sharad, these numbers which the management has shared are definitely very strong and positive. I think if Blinkit does show margins of 5 to 6%, whatever investment they have made in the dark stores is going to actually yield into a strong profit traction. In fact, the overall EBITDA also, the jump on a YY basis has been very significant. So despite a lower top line growth which the market was expecting, which the company recorded against expectation. My sense is the EBITDA growth this time is a big positive surprise. And I think once the commentary is heard in the conference call, I think you will get to hear what the management outlook is. But nevertheless, on the face of it, these numbers look good. And I think that's the reason the stock is up. The numbers have been much better than what the street had expected, specifically on the profitability front.
Just a last query on Eternal on the technical chart front as well. Milan, your view on the technicals for Eternal?
On the technicals, I think I would still wait and watch. I'll wait for the stock to go above 266 and then I'll take a long call on that. I would wait for a close above 266.
Okay. Any ideas before we let you go for the day, Milan? It's a little too late for BTST, but if you have anything which is on your radar.
Yeah, one stock that catches my eye is Nykaa. One can initiate long in Nykaa at current levels around 260. 290, 270 and expect around 292, 295 on it. One can keep a protective stop at around 258.
That's an interesting view coming in for Nykaa and Eternal as well. Avinash, before we end, anything from the new age tech, especially on the fintech side, which is looking good here?
No, I think my sense is, Sharad, once Eternal has done something good, I think obviously Swiggy will also be in action. My sense is that this is also in a comparable business, and markets would obviously look at what kind of operational numbers does Swiggy report, because obviously, despite the fact that competition has increased, the volume of opportunity is very large. So we like to keep our fingers crossed for Swiggy. I think hopefully Swiggy should also come out with a decent set of numbers, and obviously surprise the markets.
Thank you so much, Avinash and Milan, for joining us. 2 minutes to go. I want to actually pull up the dual chart, Swiggy and Eternal, and how they both are responding. Eternal has posted results, but their quick commerce and their food delivery both has boomed. What has Swiggy done? Let's pull up both those charts if we can. There you go. Just they're mirroring each other.
And just look at that Eternal, just down from 4%. Now the recovery is more than 5% in the last 10 minutes.
It's been a 16-17 rupee recovery in the last 10 minutes on Eternal, and the fact that these charts are mirroring each other, even though only one of them has, posted its results, is very, very interesting. Watch out for both tomorrow as we wrap up. All right, let's pull up the Nifty. Let's see if Eternal has added some flavor to the Nifty. Still about 90 points down, but holding up about 24,000. That's really the hill to climb for several weeks now for the Nifty. Manages to climb, then gets hit at 24,000 once again. Advanced decline ratios are looking fine. Let's pull up the heat map on the Nifty before we close off. Just a couple of minutes to go for trade to close this Tuesday afternoon. Maruti. The numbers are not being received well. The commentary is not being received well. Both have reported in the last 10-15 minutes. But the management saying that raw material costs are hitting, that sales were hit by production constraints, has not gone down well. Axis Bank also seeing another down day. Shriram Finance continuing to suffer. HCL Tech also down.
But
what's working is,
yes, gainers is doing well. ONGC, Reliance, all are doing really well. But talking about the monthly rollovers, which is there for the monthly expiry today, that's what we'll be looking at. But net, largely the energy and the power players are doing well. But let's just pull out the mid cap and the small cap indices, how they have been performing, and let's just get the Nifty mid cap index. That has done well. It's up almost 0.3%. Earlier it was slightly flattish, and the mid cap 100 index also doing well. Advanced decline ratio, let's just pull up how throughout the day they have performed, and largely we see the markets, we have seen some good value buying, at least you could say, at least in the last 15
Actually, the
minutes.
declines climbing above the advances right at the end of trade, which has shown that it's a bit of a mixed bag. But all right, 10 seconds to go before we close this afternoon, and it is all about Eternal. Maruti and Eternal, you should pull up those two charts if you can. Both have reported. Maruti a disappointment. Eternal is a plus, coming in about closing about 1% up from the lows of the day. Whoever felt they should buy in here is going to go home feeling happy. Maruti has had quite the reverse kind of a situation. It's going to be an interesting day. The focus is going to remain on results, and that's really what you should look at. Samvardhana, another one that is going to be reporting. So watch out for those set of results and their reactions going into trade tomorrow as well. Expect no, I would say, huge pop, because in a truncated week, no one wants to really take the risk.
The positions might be on the lighter side also, and especially with the rollovers, we talk about it, the volumes are on the lower side, last 2-3 months average as well.
Yeah, expected considering that while nothing is really moving on the war front, it's at the backdrop, but not front and center as a pain point. But that's all the time that we have on this edition of India Market Close. From all of us here, thank you so much for watching. Stay tuned. All the action continues on NDTV Profit on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that is happening in the world of stocks as well as news and updates from within the country and across the globe. First things first, let's take a look at the markets then. It was a lackluster day, largely coming in for Dalal Street. Nifty tested the 24,000 mark on expiry day, while the Sensex also shed over 300 points. When you talk about the broader markets, they in fact outperformed the benchmarks, hinting at selective buying really beneath the surface. Let's also talk about some of the sectors as well. Largely it was a risk-off session across the market, and that's the sense that you're picking up from the sectoral picture as well. So most sectors ending in the red. PSU banks leading the decline, while oil and energy, oil and gas as well as energy stocks stood out as pockets of resilience, largely cushioning broader losses. Let's also talk about PSU banks that were trading under pressure as the market weighs on the impact of the RBI's expected credit loss norms. The worry here is that these rules hit state-run banks harder than private lenders, forcing higher one-time provisions and lifting long-term costs. Add to that weaker charts and a sharper run-up also in valuations. In fact, analysts are also penciling in the risk of near-term profit booking that is clearly rising. Let's also talk about Coal India. Now, that was one counter that was in focus, up about 3.5% after reporting a steady set of numbers in the fourth quarter. When you talk about the profit as well as the revenue, they rose year on year. And when you talk about margins as well, in fact, held firm. When you talk about the brokerage verdict, Jefferies maintains a buy rating, pointing to stronger pricing, higher e-auction volumes, as well as a boost to power demand. From an intense summer, when you talk about Citi, they've maintained a neutral rating, saying that the earnings are largely in line with estimates and the valuations limit downside, but visibility when it comes to fresh upside triggers remain weak. Let's also talk about something like a Zidus Life that's in focus. Zidus Life as well as Lupin that stayed in focus after Estella settles with MSN, clearing the way for an imminent US generic launch of Mirabegron. Now, this is an important drug that is used to treat overactive bladder. And in terms of the analyst verdict also coming in, they're flagging faster competition and sharper price erosion. In the US market, Zidus faces the highest risk given its larger exposure, while Lupin's impact is seen as meaningful but somewhat contained, with broader pressure expected across Indian pharma names. Let's also talk about something like Bioon India AMC that was in focus after clocking strong market share gains. You had the stock up about 3.5%, emerging among the top 10 asset managers this year. And when you talk about the AUM share, that's risen about 9% thereabout. And this is the highest in several years that you're looking at this. And it's also led by steady inflows and a sharp rise in the direct channels, supported by ETFs. When you talk about revenue yields, they also improved sequentially, even as the street digested a mixed set of quarterly numbers across the AMC space. Let's also talk about Ola Electric, showing some signs of recovery as its electric two-wheeler market share inches up so far this year. Data from Vahan, in fact, shows that Ola crossed about 10,000 vehicle sales for the second straight month, helping it regain some lost ground. That said, market share remains well below levels seen in the last few years, even as rivals the likes of TVS, Bajaj, Ather, as well as Hero continue to strengthen their positions. Let's also talk about something like a Unicommerce that reported a softer set of numbers in the fourth quarter on a sequential basis, largely due to seasonality and stepped-up growth investments. Now, let's also talk about margins, because they moderated as the company scaled Shipway and accelerated AI-led initiatives with higher spending on server hosting and people costs. That said, FY26 marked a milestone year, with Unicommerce completing its first full year as a multi-platform company, delivering 5 times revenue growth over 5 years and also meeting the Rule of 40 benchmark. The company is saying that these investments are laying the foundation for the next phase of AI-driven growth. Let's also talk about something like an Orient Green that's in focus. That's in focus on the back of announcing the completion of its 9.9 megawatt wind energy capacity expansion in Tamil Nadu. The company said that its subsidiary has completed the EPC contract and received service connection for final 3.3 megawatt wind turbine. The remaining procedural formalities are underway, with full commissioning expected by the end of today. The expansion strengthens Orient Green's renewable portfolio and adds incremental generation capacity to support long-term growth. Let's also move on and talk about Maruti Suzuki that reported a mixed set of numbers in the fourth quarter. Revenue and operating performance coming in stronger than expectations, supported by healthy volume growth. EBITDA rose sharply on a year-on-year basis, margins holding steady despite cost pressures. However, net profit, that's the one that missed estimates, impacted by a sharp drop when it comes to other income and higher tax expenses. Now, when you talk about the company, in terms of the dividend perspective, they've announced a dividend of 140 rupees per share, reflecting strong cash generation even as investors assess near-term profitability trends. Let's also talk about something like an Eternal that delivered a strong bottom-line surprise in the March quarter, beating profit expectations on the back of better operating efficiency. While the revenue came in slightly below estimates, EBITDA outperformed forecasts with margins expanding more than expected as well. And the numbers point to tighter cost control and improved execution even as top-line growth moderated. Overall, when you look at this quarter, it underlines Eternal's ability to defend profitability and margins, keeping investors focused firmly on efficiency-led earnings delivery. Let's also move on and talk about something like a Sapphire Foods that was in focus on the back of delivering a solid top-line growth in the March quarter with strong expansion. When you're talking about revenue and operating profitability, supported by margin improvement, however, the company slipped into a net loss when you look at it on a year-on-year basis, and the stock, of course, was not doing all that much. But when you talk about the higher one-time gains, they reflect elevated cost and profitability pressure while operating performance remains steady. The bottom line is something that was weighed down by expenses, keeping investor focus firmly on cost control as well as earnings recovery going forward. Let's also talk about AU Small Finance Bank that was in focus after reporting a strong set of numbers. The stock, of course, was under a little bit of pressure, but you did have healthy growth and improving asset quality when you're looking at the Q4 fine print. Profit surged sharply on a year-on-year basis, supported by solid loan growth and stable margins. When you talk about the net interest income as well, that rose strongly. And this is even as other income dipped modestly. When you talk about the asset quality trends, they improved further with both gross and net NPS declining. Deposit and advances as well continued to grow at a healthy pace, while credit costs remained well under control for the full year, reinforcing confidence really in the bank's growth and risk management framework, but the street, of course, was looking at it differently. Let's also talk about Adani Total Gas reporting a steady set of fourth quarter numbers supported by strong infrastructure-led growth. Revenue rose sharply on a year-on-year basis. The stock, of course, was cheering that as well, about a 3% uptick coming in. And you did have higher volumes when you're looking at this particular quarter. EBITDA growth tracked operating performance closely as well. And even when you talk about the profit, that also posted a modest increase, reflecting stable margins despite expansion-led costs. And when you talk about gas volumes as well, they grew at a healthy pace as network expansion continued, with per unit profitability remaining flat. So overall, the quarter underlines consistent execution as Adani Total rides India's city gas infrastructure push, and that's something that the stock, in fact, was also cheering. Let's also move on and talk about Asian Granito India that is in focus after strategic investors picked up close to a 5% equity stake, and this is through open market transactions. So you do have Artcom Ventures as well as another set of investors that acquired shares worth over 130 crore, signaling confidence really in the tiles and bathware manufacturers' outlook. And when you just talk about Artcom as well, they alone bought nearly 2.3% at around 76 rupees a share. This particular buying, in fact, is coming in from a set of marquee investors, adding credibility and renewed interest when it comes to the stock. Let's also talk about something like a Dalmia Bharat that reported a steady set of numbers in the fourth quarter, with operating performance standing out. Revenue grew modestly on a year-on-year basis, while EBITDA saw double-digit growth, aided by sharp margin expansion driven by cost efficiencies and operating leverage. Now, when you talk about the net profit, that declined compared to last year, and the company also announced a final dividend of 5 rupees per share, underscoring healthy cash flows. And this is even as investors really focused on demand trends as well as profitability going forward. Let's also talk about something like a RailTel that was in focus after bagging a major telecom and digital connectivity order worth about 145 crore rupees. When you talk about the stock as well, it was up about 2.5%. This order that they've bagged was from Eastern Coalfields, and the company has received a letter of acceptance for providing internet leased lines, video conferencing and managed bandwidth services. And this is across this particular company's network as well. And the contract is going to be executed over a 5-year period with completion scheduled by May 2031. The order further cements RailTel's position as a preferred tech partner for large public sector enterprises. Let's also get you some other updates as well onto an NDTV Profit exclusive as well. PakeXV has in fact fully exited MobiKwik through a block deal worth over 130 crore rupees. Around 8% equity changed hands, with a clutch of domestic and global institutional investors picking up the stake. The deal marks significant shareholder churn at MobiKwik as well as a complete exit by one of its early backers. Moving on, then, exclusive sources indicate that Indian Airlines are currently in a wait-and-watch mode and are likely to take a final call on flight cuts after the May aviation turbine fuel or ATF price revision. In fact, sources are indicating that the sharp jump in fuel prices could force carriers to rationalize schedules, especially on low-profit route sectors with weak load factors and short-haul flights where economics are most vulnerable. Now, when you talk about airlines, they're also preparing for multiple scenarios, including any changes to the current 25% cap on ATF price hikes. In the event this cap is removed, domestic flight cancellations could really rise sharply. Let's also get you some business news then. ICRA's latest monthly report flags a mixed picture for the aviation sector. Passenger traffic grows modestly in March, wrapping up the year with low single-digit growth. Even as capacity remains lower than last year, airlines run at higher load factors, helped by stronger month-on-month demand. However, when you talk about rising fuel costs, elevated crude prices and a weaker rupee, they continue to pose cost pressures for the industry. Let's also move on and talk about AU Small Finance Bank that has formally applied for a universal banking license after the Reserve Bank of India eased a key structural requirement for the transition. The Jaipur-based lender has submitted its final application, and this is following the RBI's relaxation of the NOFHC norm, which was earlier a major precondition as well. The bank had already received in principle approval in August last year. Once approved, the transition is going to be allowing AU to offer a wider suite of banking products and really scale up corporate and wholesale lending. Let's also talk about quick home services startup Snabit as well, that has raised about $56 million in a Series D funding round, more than doubling its valuation to somewhere close to $350 million. The fresh capital coming in as competition intensifies in India's fast-growing on-demand domestic health market, where startups are scaling aggressively to capture urban households. Snabit offers instant home services such as cleaning, dishwashing, and laundry through a managed workforce model. Let's also move on and talk about Google Wallet that has now started supporting Aadhaar verifiable credentials in India, allowing users to securely store their identity details directly on their smartphones. The feature has been launched in partnership with UIDAI and offers a digital-first, privacy-focused way to prove identity or age without carrying a physical document. Now, Google is saying that the system uses selective disclosure, which means only the necessary details are shared for a specific use case. Initial partners include PVR Inox, Bharat Matrimony, Atlas, MyGate, and Snapit. Let's also talk about Chinese sportswear major Anta Sports Products Limited that is set to make its India comeback next month, marking a significant signal of improving business sentiment between New Delhi and Beijing. Now, the company will reopen with its first store in Gurugram, with plans to also scale up to 10 stores across the country by March 2027. Its local partner, Brandman Retail, says apparel will be positioned in the premium segment at an average price of close to 8,000 rupees, while footwear could retail at 9,000 to 10,000 rupees. Now, Anta had earlier exited India in 2020 amid deteriorating bilateral ties. Let's also move on and talk about Andhra Pradesh Chief Minister N. Chandrababu Naidu laying the foundation stone for a $15 billion Google AI data center near Visakhapatnam. And this is in what is being built as one of India's largest digital infrastructure investments. When you talk about this facility, in fact, it has 1 gigawatt capacity, expected to emerge as a major AI cloud and data storage hub for the country. And it's also spread across nearly 600 acres. The project is also being positioned as the centerpiece of a larger 6.5 gigawatt digital ecosystem vision for the state. Now, Naidu, in fact, described the investment as a growth engine for India and a major boost coming in for North Andhra. Moving on, then, let's talk about the inauguration of Google's AI data center project. IT Minister Ashwini Vaishnav urged the tech giant to manufacture servers in India, giving a strong push to the center's domestic electronics and AI hardware ambitions. Vaishnav also asked Google to focus on energy efficiency and optimize water use under the India AI mission as the country scales up large data center infrastructure. He's also said that Visakhapatnam could soon emerge as AI Patnam, drawing parallels with Hyderabad's Cyberabad transformation as well. So that's the latest word coming in there. Let's also talk about PM Modi sharing a lighter moment during his Sikkim visit, joining local children for a friendly football game in Gangtok as well, and the visuals show him dribbling, taking a shot at goal and interacting warmly with youngsters on the field. Now, the interaction came alongside his official visit for Sikkim's 50th statehood celebrations, where he is also scheduled to launch development projects to the tune of about 4,000 crore rupees. Let's also talk about Noida International Airport that has crossed another major regulatory milestone, receiving BCS approval for its aerodrome safety plan, which is a crucial step, mind you, before commercial operations begin. The Bureau of Civil Aviation Security's NOD confirms that the airport security framework, emergency response systems, and operational procedures are now in place as per regulatory norms. The airport says that it is now working closely with airlines and partners to finalize a launch date for flight operations. Moving on then, Mumbai will face a 10% cut in water supply starting May 15th, according to BMC chief Ashwini Bede as well. And the decision has been taken due to depleting water levels in the city's lakes amid a deficient monsoon last year and also delayed pre-monsoon shower. Now, the cut is going to be applying across all regions and is expected to remain in place until the onset of the monsoon. Residents have been urged to use water judiciously and also adopt conservation measures. And as temperatures soar past 40 degrees, the IMD has issued a heat wave warning for several regions on April 28th. So you're talking about Vidarbha, Rajasthan, Odisha, Telangana, Chhattisgarh that are likely to experience severe heat wave conditions. Meanwhile, rainfall is expected in the national capital and parts of northwest India. The IMD has advised people in the affected areas to take precautions against the rising temperatures, especially the elderly and children. Let's also move on and talk about Defense Minister Rajnath Singh attending the Shanghai Cooperation Organization Defense Ministers meeting in Kyrgyzstan. The key agenda includes discussions on the ongoing Middle East conflict and its impact on the regional security. Singh is expected to hold bilateral meetings with counterparts from SCO member countries to strengthen defense cooperation. Let's also move on and talk about Salim Dola, a close aide of fugitive underworld don Dawood Ibrahim, who has been deported from Istanbul and brought back to India. Dola was arrested by Turkish authorities and handed over to Indian agencies. He is wanted in multiple cases, and that includes extortion, murder, and links to organized crime syndicates. The deportation marks a significant success for the Indian law enforcement in tracking and bringing back key associates of Dawood Ibrahim. Let's also move on and get to some international news. Then Iran has proposed easing its chokehold on the Strait of Hormuz if the United States ends its military campaign and also really lifts its economic blockade. And that is according to regional officials as well, but the offer was conveyed to Washington through Pakistan amid a fragile ceasefire. However, the proposal would postpone talks on Iran's nuclear program, a condition US officials are unwilling to accept. President Trump is seen as unlikely to back any deal that leaves core disputes unresolved, while US Secretary of State Marco Rubio has also made it clear that nuclear restrictions must remain central, warning that Washington cannot allow Iran a path towards nuclear weapons. Let's also move on and talk about the word coming in from Iran's Foreign Minister Abbas Araghchi, who's met Russian President Putin, hailing Moscow and Tehran's strategic relationship as fighting and diplomacy unfold in parallel across Middle East. Now, the Kremlin is saying that Russia is ready to offer goodwill or mediation in future talks between Iran and the United States as Washington's direct engagement stalls after President Donald Trump, in terms of word coming in from him as well. Let's also move on and talk about tankers carrying Iranian oil that are beginning to bunch up off the port of Chabahar as well, and just short of the effective reach of the US blockade. Satellite imagery and maritime intelligence show as many as 6 to 8 supertankers idling in the Gulf of Oman with several smaller vessels nearby. It's the same corridor where US forces intercepted and redirected crude carriers last week. Let's also move on and talk to you about some sports news. Vinesh Fogart has accused the Wrestling Federation of India of deliberately blocking her return to the sport. The Olympic medalist claimed that despite completing all formalities and medical clearances, the federation is not allowing her to train or compete. Vinesh, in fact, has said that she has been facing repeated obstacles and alleged that the WFI is acting with bias. She has now appealed to the Sports Ministry and the Indian Olympic Association for intervention. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Markets swing back to red today after lackluster trade. Nifty closes above 24,000 levels. PSU banks volatile as RBI tightens the NPA norms. Broader markets, though, end with a positive bias. Maruti Q4 earnings are in line with the street expectations. Revenues rise by 28%, but the profits are down almost 7% compared to the last year's same quarter. Margins hit by higher costs. Oil prices edged higher as traders weighed fresh US-Iran diplomacy. Crude hovers over $111 a barrel as the Strait of Hormuz remains virtually shut. Aviation sector hit by Middle East war. Airlines mull flight cuts amid high ATF prices. Warn shutdown risk. Seek urgent government intervention. Government mulls dropping anti-dumping duties on textile inputs, eyeing cuts on nylon chips, rayon, pulp, glass, chemicals. Big AI infrastructure push for India. The Adani Group and Google launch $15 billion AI data center in Visakhapatnam, marking Google's one of the biggest bets on India. India reels under heat wave. IMD issues advisory warning of rising heat stroke risks and also urging precautions. Meanwhile, higher temperatures boost power demand, cooling appliances and mining activity. Hello and welcome. You've tuned into Market Profit 360. I'm Nisha Poddar and let's take it straight to the market action for the day. Well, the markets largely dwindled in the trade and also settled in the red, while the Nifty really settled just shy of 24,000 levels. The Sensex lost over 400 points. Broader markets, on the contrary, did relatively better than the key indices today, ending flat with a positive bias, and volatility was especially high in the banking stocks as many of these counters really absorbed the RBI's new credit loss guidelines. Let's actually get my colleague Jasmeet to take us through all the details of the market action today. Jasmeet, tell us.
Well, Nifty ends in red today, down about 0.4% and it ends below the 24,000 crucial mark. Well, yesterday we did see closing above that mark, but today it ended in red. If we look at the other key aspect, we have Axis Bank and HCL Tech for the top losers in Nifty 50. Both are down about 2.5%. If we look at the broader market has overperformed the benchmark altogether, where small cap 250 and mid cap 150 ended it flat. Now, in terms of top gainers in mid cap 150, we have stocks like Oil India and Glenmark, both top gainers of mid cap 150, while in small cap 250, we have stocks like Cohen's Life Sciences and Tata Chemicals, where they have gained the most when you look at the small cap 250, both gaining over 11%. If we look at the key sectors have ended on a mixed note. Something like Nifty PSU Bank is the worst performing sector, down about 2%, and it sees the pressure in today's market. If we look at the top losers in Nifty PSU Bank, we have stocks like Union Bank and Bank of Maharashtra, both losing over 2.5%. In terms of the key trends, we do make a note that Nifty Metal, Nifty Energy, Nifty Oil and Gas gained for the second consecutive day in a row and continued a streak. Apart from that, the rest sectors have ended in red in today's trade.
All right, thanks Jasmeet for taking us through that. And flashing on our screens is the IIP data. Let's see how the industrial production has really done for the month of March 2026 and has been announced at 4.1%. Now this has, remember, been dropped from the February's level of 5.2% growth. So 4.1% when it comes to the IIP data for the last particular month. And remember that in the earlier times, in the month of February, it had picked up beautifully at 5.2%, and in the month of Jan, it was 4.8%. So it is lower than last at least 5 months that we are seeing the industrial output data at 4.1% versus, remember, the estimate that was pegged by the street was at 2.7%. So the month of March IIP data and some of the industrial numbers also, and the internals really showing up. Let's welcome on the show an economist to put all this into perspective. Aditi Nair, who's the Chief Economist and Head of Research and Outreach at ICRA, joins in. Aditi, always a pleasure to welcome you on NDTV Profit. What do you make of the 4.1% figure for IIP? It is a considerable drop compared to the last month, but we were anticipating some softness already because of the global turmoil.
Thank you, Nisha. Absolutely. This is actually a much better number than what we were expecting. Having seen the contraction in the core sector output, we thought that growth would be somewhere in the range of 1 to 2%. So 4.1% is much higher than that. And I think the mining sector within the IIP has done much better than what coal and crude oil had suggested out of the core sector data. And manufacturing has held up pretty well, given the fact that we did have the supply chain and price-related issues emanating out of the West Asia crisis. And also, when we look at exports, last year in March, there was, the trend of Front-loading exports to the US was very much on at this point in time. So the base, because of that, was also not very favorable this time. So I would say that this is actually a much better outcome than what we were expecting.
That's right. Aditi, consumer durables rise is 5.3% versus 6.9% on a year-on-year basis. So a big dip has come in that particular front, while manufacturing has still shown a slight growth compared to the last month. And as you mentioned, mining has seen a considerable growth as well. Where are we lagging behind and what are the soft spots?
See, within the IIP, it is electricity which has not shown much growth. We already knew that. We'd seen that from the daily electricity data as well as the core sector data. This was a month where temperatures were on the softer side, and typically that is something that tends to pull down the electricity growth very, very quickly. Other than that, when we looked at the core sector, half of them had contracted in March, half had shown a growth. But most of them had anyway shown a deceleration as compared to February. So to some extent, the impact of West Asia had already started creeping into the core sector data in March itself. And the IIP has held up very well in light of that. Consumption related trends were still doing okay in terms of some of the other high frequencies that we're looking at. So it'll be interesting to see now in April, when we're in the second month of the conflict. But it's dragging on, but maybe the kind of stress has been internalized to some extent. How are the supply chains now holding up in the month of April? So next month, of course, when we get the data, it will be on the new series, not on the current series. So in any case, it could show a very different outcome as compared to what we would forecast at this point in time for April.
That's right. So Aditi, electricity sector and even primary goods output is up 2.2% versus 3.9%. So that's where, again, softness has come in. Consumer has seen softness. Electricity has seen softness, while mining, manufacturing has done much better. But it's also the first month, Aditi. This particular month can be reflective of a lot more of the West Asia crisis really impacting those particular numbers. What are you penciling in for this particular month then?
So, the interesting thing, like I was just saying, when we get the data for April, it'll be on the new base. So, we really, at this point in time, it's a toss-up what the new base is going to tell us. For the CPI, we were much more sort of able to tell what the CPI inflation would look like in the new base as compared to the old base. But for the GDP series, for instance, we ended up seeing that the GDP on the new series in nominal terms was actually lower for the last 3 years as compared to the old series. On the IIP side, I'll be quite, I think my first guess is that because the IIP will be now moving to a new base, probably we will end up being able to calculate, data for a current set of factories. So perhaps it will be a better growth than it would have been on the old series. Having said that, the impact of West Asia would still be there. So I suppose we should be prepared for a modest growth at best, balancing both of these things out.
All right. So yes, new base, new series makes it even more less comparable on an apple-to-apple basis, Aditi. Well pointed out. But as the numbers really show, of course, apart from mining, manufacturing, the consumption-led area, consumer durables, consumer non-durables, capital goods, all of them have seen a huge boost. And that has really pushed up the IIP data much better than what the street was really penciling in over there. Any final word on the outlook?
So along with the IIP data, around the same time, we'll end up getting the Q4 GDP data. So we're broadly penciling in it at around 7% and the full year GDP growth for FY26 at around 7.5%. Of course, we'll be looking at these numbers, looking at our forecasts more granularly in the next few weeks as we get more information on earnings and margins. How the onset of the West Asia crisis affected the margin side of things as compared to the volumes, which today what we wanted to know was better at least than what we had penciled in.
All right, Aditi, thank you so much for all your views and putting into perspective the IIP data. That's for the month of March, really coming in at 4.1%, much better than what was really being estimated given the context of the Middle East crisis and its impact on the economy. All right, let's cut straight across to Maruti's press conference on the earnings, and Chairman of Maruti Suzuki, R.C. Bhargava, is speaking there.
Which have been commissioned in Kharkhoda and in Hansalpur, which each of them will have a full capacity of 250,000 cars a year. And because they've just started production, the expectation is that during the year, these two lines will add roughly around 250,000 cars to our production capacity this year. And that would, in fact, reflect what we can produce and sell in this year, because even today, to reach our sales today of what, 2.4 million or so, we are running virtually at 100%, and we have a backlog and we have very low inventories. So our growth is now more or less determined by our ability to add capacity and to run, and of course we run at 100%. Having said that, I think what we are going to see in the next few years is every year we will see now growth happening in the car industry because of the fact that the demand has once again revived. And I think government is understanding and appreciating the fact that lower taxes actually benefit the economy. You will have a lot of questions to ask, and I don't want to preempt any of those questions. So with this, I would leave you to any comments which Takeuchi-san or anybody else will have. So over to you, Takeuchi-san.
Thank you, Bhargava-san. And I think Bhargava-san already explained very well about our current, result. And now I think so to save time, we can, I think, straight go to the Q&A session from press people.
Yes, okay. Thank you so much, sir. Sir, our first question is from Rajkumar Leshamba-san from PTI. Request Leshamba-san to kindly unmute himself and ask the question. Sir, we cannot hear you.
I can see you, but I can't hear you. I can't hear you. No sound.
All right, so that was the management of Maruti explaining that growth will be coming in with more additions to the capacity, and that's what they are really focusing on. But let's also focus on what really transpired at Maruti. Of course, the revenues really got a stupendous growth, but there was a dip in net profit, and there were cost pressures that really impacted the company in the present quarter. Puneet is here to explain and give perspective on the numbers. Puneet.
Well, Maruti Suzuki came out with their quarterly earnings, and it's largely a beat across key metrics in line with the numbers that we were working with as well. So revenue grew by 27% at almost 52,400 odd crores versus roughly 40,900 crores on a same time last year basis. We were working with a number of almost 50,000 crores, 50,900 odd crores in terms of revenue. So it's beaten the estimate there. In terms of EBITDA, also a growth of 27% at 6,100 crores versus 4,800 crores is another beat with the number that we are working with. 11.7% margins versus almost 10.5% in the same time last year as well. So you've seen margins largely being in the range that was mentioned as well, and given at a very important quarter nonetheless, because we've seen commodity costs increase materially because of the Israel-Iran war. So they have been at least managed to stably maintain at 11.7 in quarter 4. What happens in quarter 1 will be something to watch. Profit is down 7% at 3,591 crores versus estimates of 4,000 crores. Now, this is largely because of a very big movement of other income. So, other income has come in at 500 crores versus 1,500 crores in the same time last year. So you're seeing that 1,000 crore differential essentially impact the profits in this quarter. Likely this is because of a movement of their investments, specifically in debt mutual funds, something that has been witnessed previously as well. But that's a good quarter for the company. We saw volume growth, which was already visible at 12% for the company as well. But likely the key aspects to watch will be that in terms of commentary, what the company mentions in quarter one, in terms of if there was any shipments impacted for the export market to Africa and Europe, will be other aspects to watch. But largely a quarter that was largely in line with the estimates. And in terms of profits, while there was a dip, there was the other income component and not operational performance being impacted.
All right, operational performance has been in line with the estimates. Thanks, Puneet, for that. Now, Eternal, and that particular stock really rose in the last, minutes of trade by almost 1%. There you see the spike, and Eternal recorded a blockbuster quarter. The company's net profit really jumped a massive 346% on a year-on-year basis to 174 crore rupees compared to just 99 crore rupees in the last year same period. Now, the same was the case with the revenues also that rose nearly 196% and EBITDA soared by over 5 times. In fact, Mahima is standing by with all the details on Eternal's numbers. Mahima, tell us.
Right, so overall Eternal Q4 numbers have been on a positive footing. We saw the stock reverse from a negative 3% to almost a positive 2%, and this is largely on account of how the numbers have fared. In terms of the Q4 numbers, net profit was certainly a beat in terms of estimate. Revenue slightly short of the overall estimates versus the overall estimates. Margin beat 2.8% margins overall is what has come in. In terms of food delivery business, saw growth of around 33%. In terms of even the Blinkit business, that saw growth of around 99%. Both of these have seen good growth in terms of net order value terms as well. The management has said that they're more confident of getting closer to the guidance of 5 to 6% of margins today versus what they'd given before. The only variable is the speed at which they will get there. NOV growth in district also rebounded to around 47% year basis. However, Hyperpure was where we saw a downtick of around 47% in the total growth. Blinkit NOV growth should be at a CAGR of 60% in the next 3 years. That means the business will grow 4 times in the next 3 years is what the management has said. And this will be bought by assortment expansion, geographic expansion as well as demand density will bring in growth in terms of quick commerce. Lastly, cash balance slightly increased to 17,900 odd crores versus 17,800 odd crores in Q3 FY26. So this is the overall view of how Q3 has panned out for Eternal. Q4 in fact, sorry, not Q3.
All right, Mahima, Q4 it is. And yes, very strong projection when it comes to the guidance given to the grocery business. But this is the very competitive space as well. All right, let's move on from the big earnings of the day. The government is stepping up efforts to really support the textile sector, with trade advisor Bipin Menon really flagging a series of duty rationalization proposals. Now, these include potential cuts on Capro as well as lactam and nylon chips, along with the duty elimination also on key inputs like rayon grade wood pulp and also certain inorganic chemicals. So there's also a push to really ease the anti-dumping duties on select of these yarn segments. Let's listen in.
We're also further taken up some other inputs that are not part of this notification, which includes caprolactam and nylon chips. We've also been pressing for the rayon elimination of duty on rayon grade wood pulp, which is an input for the viscose segment, and also inputs for the glassware manufacture, where I think there are a lot of inorganic chemicals which are inputs for that.
All right, the Indian airlines are hit by Middle East crisis, according to exclusive sources telling NDTV Profit. Well, airlines are likely to take a call on cutting the flights after the May ATF revision. Now, sharp hike in the jet fuel prices could force the carriers and the airlines to really rationalize their capacity. In fact, my colleague Danish Anand, who's really sourcing all those information on the mood at the airlines and the reaction to the ATF price hike. Danish.
So basically, OMCs, they get crude in a barrel form, and when they process it, they make final products. So this crack spread is basically the final amount that is supposed to come out after taking the doing the plus and minus as far as what was the crude output and at what price did the crude was bought by the OMC, and when they are processing it into ATF. So that difference is basically the crack spread. And as per the old calculation, the government and the airlines came to a conclusion that the crack spread will never widen from between $12 to $22 per barrel. So that is where the crack spread thing is concerned. But this particular crack spread is now stretching beyond $22 per barrel, which is kind of becoming uncomfortable for the airlines.
That's right, Danish. It's becoming uncomfortable, and that's what is also leading to some measures that the airlines are really thinking about. So what is the airlines thinking, and will there be a rationalization on the flight operations? What have you heard?
That's true. Kind of FIS signaled SOS to the government, and this is coming at that point in time. In the letter, FIS completely stated to the government that due to the crack spread widening, and as per the previous calculation that was there between 2022 to 2025, FIA believes that it was more transparent, and this crack spread difference was in a range of between $12 to $22 per barrel. But now, since we are seeing that the Brent prices have crossed $100 per barrel, it is creating an impact on this particular crack spread. So which basically means that the airlines have to pay more for uplifting ATF in their aircraft. As far as the relief is concerned, government has given them a cushion only for the domestic ATF. But even right now, if any airline has to fly abroad, they have to pay at least minimum $1,000 per kiloliter for uplifting fuel in their aircraft. So this is very surprising, and this is a very surprising for the entire aviation industry, as at the moment they're expecting more support from the government, and they've clearly highlighted that just 4 days before the May revision of ATF, FIA stated that because of the crack spread widening, it is not viable for any airline to continue operations. So they have signaled to the government that they require some more support. In fact, earlier in the day, we had also reported that airlines are planning to reschedule certain flights and cut certain flights. And this FI letter has come at that point in time when they're clearly signaling distress to the government, and they want some or the other support from the government. They have highlighted that if OMCs are being cushioned, why not the aviation industry should be cushioned from this price shock?
All right, Danish. So airlines really rethinking their strategy at the current moment and not being able to carry on with the pressure of the fuel prices. Now, moving on, the Adani Group and Google are doubling down on India's AI ambitions, breaking ground on what could become the country's really largest AI data center campus in Visakhapatnam, with an investment of nearly about $15 billion. And this gigawatt scale project really marks one of Google's best and the biggest bets on India, aimed at building a massive digital as well as cloud infrastructure, boosting jobs, and also positioning Vizag as a global AI hub. Let's listen in to what Jeet Adani as well as N. Chandrababu Naidu, the Chief Minister of Andhra Pradesh, had to say at the foundation stone ceremony.
Today, India stands at approximately 1.3 gigawatts of data center capacity. Just for context, here today we are envisioning nearly 1 gigawatt in a single location. That contrast reflects the scale of transformation ahead. India is entering a new league of AI infrastructure.
With the Google innovation and Andhra Pradesh speed of governance, both we wanted to integrate, we want to produce a model for the rest of the world. That is where we are thinking. Either it may be education, it may be health, it may be agriculture, logistics, everything, even one family, one entrepreneur, we want to work all these things. Very soon, every citizen is going to see AI tutor, AI doctor, AI agronomist, AI personal assistant.
All right, so AI Data Center Hub in Vizag. With that, it's a wrap on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headline
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome back to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies in KYC and maybe create alpha for you as well. But as per our format, I'm going to give you some hints try to guess the company. It's a very interesting company I have got. It's a Pune-based heavy engineering company. Of course, a lot of companies are there in this cluster, but more details about it. There's a literal township named after the company. Pretty interesting, right? I'll give you some examples also how it actually pans out, and it's backed by Ashish Kacholia. He has more than 1% stake in the company as per the March shareholding pattern, and it deals in defense, nuclear and aerospace, industrial and also industrial products. A lot of discussions about this company, and I've given you a little bit of hint. There is of course Tata Nagar is there is Bata Nagar, there is Kirloskar Wadi. An interesting company is Walchand Nagar. Yes, the company I'm focus is Walchand Nagar Industries. Everybody's talking about it recently. The stock also has been buzzing. But why are we calling this company? What is the interest of mine to get this company in KYC and decode it? First question is the structural turnaround. Is there any trigger happening from the fourth quarter? The management doesn't speak a lot. That's why we have got this company, and they had given us a little bit of hint in the Q3 numbers as well. Now, buzz in the street is that there might be a fund infusion plan as well. If yes, we'll try to understand why does the company need it. Also, the growth outlook for the defense and the aerospace business. We have spoken a lot about this. A lot of its peers have given a good rally recently. So has the company done that. Operating leverage, that is where the return ratios start turning positive. For a long time, the concern has been there. So that's something that needs to be addressed. The incremental benefits for the private players in the nuclear segment. Remember last year there was a Shanti bill in 2025 December. Company was a beneficiary of it. There was a run up. After that, of course, markets turned volatile, but then the stock price is back. But it's a perennial problem with this counter. The promoters share place, that's on the higher side. How are they reducing? That's something which becomes a very major trigger for the counter and the order book status in the fourth quarter and the outlook ahead. So these are the important questions we will be going through, and of course the capex and the expansion plans for Walchand Nagar Industries. And to put that in perspective, we'll be joined in by Chirag Doshi. He's the MD and CEO of this company, where Chirag will decode and answer all of our queries. But more queries are there, so let's understand the business. How much of this business is all about, and what are the important for factors and against factors. It's a historical company. It's established in 1908. It's a heavy engineering company. The cluster area in the Pune district, that's where it's located. Of course, they have something called defense, nuclear, aerospace, DNA as they call it. That's where the focus they are lying. But of course, they have other businesses also. This includes foundries, gears, centrifugals, castings, gauges. Remember, there is a seasonality at play as well for these sectors. So that's how we are going to get these businesses in two portions. The company is also having an ace investor, Ashish Kacholia. He's having roughly 1.5% stake as well. But let's get into the details about it. The company has worked with ISRO for over 50 years. So of course, they are having long-term associations with the government authorities. They have been instrumental in Chandrayaan 3. There is Aditya L1, Gaganyaan program mission. So they have been there in the space programs. And interestingly, Chirag Doshi has been reappointed recently as an MD and CEO for next 3 years as well. So this of course augurs well for the stock. They are a beneficiary of Shanti bill, and this is definitely for the nuclear business which we spoke about in 2025, and there was this news flow coming in. But the question remains is what is working for the company? There's a potential of private player in the nuclear space. We'll try to understand from the management as well. The second reason what's working for the company is a high retail interest coming in. That is where a lot of conversation is happening. Improvement in working capital ratios, that has improved. At least we have seen that in the third quarter. Hopefully fourth quarter we'll say something. And there's another buzz in the street of a fundraise for Walchand Nagar Industries. So that's what's working for the company. But what's not working for the company, that's also a big concern. There's a cyclical nature of the key business segments. I'm not talking about the DNA segment. I'm talking about the foundry segment where the numbers have been impacted. Higher promoter pledge, that remains a big concern for this company. And also, no major participation is coming from FISDIs. There's a lack of analyst coverage as well, and that is where the question or the concern rise. And the biggest one is the weak return ratios. They have been plaguing the companies until as the ROE, the ROC improves, doesn't improve. there seems a concern, and another concern is definitely the valuations. They are also expensive. So we have given you the entire picture of what's working for the company and what's not working for the company. Another important number or the ratios we talk about is the KYC ratings. Let's see what are the ratings we are going to give the company. It's going to be income statement, balance sheet, cash flow. These are the important numbers to look at when we judge a company in KYC. Key operational ratios, because I've taken a couple of ratios, just not the return ratios, to give you an entire picture about how the company is functioning. Shareholding, street cred, kitna paisa bana 5 saal mein, ya March ke low se kaise paisa aaya. We'll try to get you all those details and the valuations. We'll try to see how things are panned out, at least in that 5-year period. And last but not the least is the outlook segment. So these are the 8 ratings where we'll judge the company. But let's take you to the first parameter, and that's the income statement. And this is where we see there is a downtick coming in a little bit, and these are, remember, losses which I'm talking about. The red numbers you can see, these are the losses, which is the downtick which is happening. Top line we see there is a kind of a moderation happening from FY24 to FY25. There is a seasonality at play, but largely we see net there is no stability as such when it comes to the number. That's why the CAGR numbers are purposefully removed. But the Q3 numbers is something which I like. There was a little bit of turnaround. Some margins are also did come in, and that is where the management was showing a good strength over here. See, over here it has been, in the negative. But look at that, the 19% up move coming in, and slowly the company is showing operational profits. And when these situations happen, that is where we get the maximum alpha. When things are from very bad to bad, that is where the stock starts moving, and that's why I'm going to give you that reason. But net right now, income statement, it's a neutral rating when it comes to Walchand Nagar Industries. Let's talk about the balance sheet. It's been decently maintained. The borrowings have actually come down from around 241 odd crore rupees. It's down to 193 crore rupees. Working capital ratios have improved, and so has the balance sheet ratios, and it's evenly placed. I would say 109 crores of cash balance is also there, and net the management is strong when it comes to the balance sheet. So it's a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's take it to the third one. That is the cash flow statement, and that is where a little bit of concern starts coming in, because their cash outflows are more at times. Your PAT numbers are down, so the conversion ratio from PAT to cash flows, that becomes an issue. And if this issue pertains, then definitely the return ratios get, you could say, impacted. So cash flows, it's a negative rating or a thumbs down when it comes to our analysis. Let's talk about the operational ratios, how things are moving. There has been an improvement in the debtor days, so that's one side is positive, but the other side, which has been perennial for the stock, is the lower ROIC ratios or in the negative. That has actually spooked the street, and this has continued for a really long time. So the company's operational leverages, if they start improving, the ROE numbers also start going up. So it's a neutral rating when it comes to the key operational numbers. Let's talk about the shareholding, what has happened. A little bit of concern is that promoter stake is quite less. That's what some analysts speak about, but I wanted to get a little bit into the details. The concern is not the lower promoter stake, it is the share pledge. That needs to reduce, and that's an overhang for the stock. Another overhang is the FIs, DIs. There isn't much participation here. So unless the numbers start coming in, unless the turnaround happens visibly on the numbers, you might not see FIs and DIs, but retail, it's a favorite. That's around 67% of holding is there in the retail as well. But net, let's give this a neutral rating for shareholding, because the promoters haven't sold any stake. And it's not that, major participation from FIs or DIs have come in. So it's kind of nullifying our thesis on the shareholding part. But apart from that, let's move on to the street cred. Let's give you the picture of how much returns have been made. And overall, if you have been holding the stock for a long time, it has done well. Last 5 years, you have made almost 4 times the money, 275%. Congratulations to you. And if you look at the March lows, this is the numbers you should look at. From that level onwards also, it's up 68%. This is the rally which we saw in the defense aerospace theme as well. Last year itself, stock is up 14%. But remember the highs which were seen in the counter, that was 2024. From there, the stock is still down 47%. So definitely concern is there, but it kind of negates our analysis. So net, it's a neutral rating when it comes to the street cred. Valuations, let's see what's happening here, and valuations is a concern for me. The 5-year average is at 63 times. Current, if you look at it, the 12 months trailing P is at 87 times right now also for Walchand. And if you look at the peak which was there, the 2024, the euphoria which was there in this industry, the stock almost had 100 times of P when it comes to the trailing P numbers. So valuations are not at all cheap, and maybe that is why it's better to stay away. At least the earnings should start coming in, then the valuations might turn cheaper. But as of now, valuations, it's a strong thumbs down. Let's talk about the outlook. Let's see what's there in the outlook. And outlook over here, the pointers are quite less. The outlook has not been shared for FY27 yet, and that's what we'll try to understand from the management. They are likely to improve from the fourth quarter, the margins front, and that is what we had seen in the con call also. Now, they're a beneficiary of the private sector entering into the nuclear segment, and that is where the interest lies for the market going ahead. And that's what picked up this company in KYC. The structural turnaround that's expected to happen going ahead, and the street is also talking about it, rumors or buzzes there that there might be a potential fundraise as well. So now net company has very less to lose from these levels, so it's a strong thumbs up when it comes to the outlook. But पूरा rating क्या है, वो कितने numbers हैं, let's talk about them, and of course let's give you a revision of how things are panning out. The balance sheet has been maintained nicely. Income statement Q3, their good portion has started coming in when it comes to the turnaround. Cash flow is dismal for the company. Key operational ratios are balancing each other out. While shareholding, of course, the promoter shareholding pledge is a concern, but street cred has been neutral. In the March lows itself, the stock is up more than 60%. So if you even have done a 1-month investment in stock, congratulations to you. Valuations are expensive, but outlook remains strong as well. So net, the total rating is 4 out of 8 for the company, and of course the company needs to prove on the future. And of course the street wants something more as well. And to put that everything in perspective, we'll have Chirag Doshi. He's the MD and CEO of Walchand Nagar Industries, and interestingly he has been associated with the company for more than 2 decades. And a little bit of snippet about him apart from that is he has an education from INSEAD and Harvard Business, and he also owns and operates fine dining restaurants in New York and Mumbai as well. That's pretty much interesting. Good afternoon, Chirag. It's always a pleasure to have you at NDTV Profit. And first and foremost, the question I want to ask is, in Q3, you had given us a little bit of hints about the turnaround in the company. And the first question is, by when we can see fourth quarter? Of course, the numbers are not out. We do not need to share the numbers, but give us the flavor of the turnaround for Walchand Nagar and how it is happening.
Yeah, Sharad, thank you for having me on the call. I think I had talked about it a few months ago, and I think it's playing out exactly the way we had planned. It has been a journey for the company to sort of reach this stage, but I think we're now very much at the end of our turnaround. Q3 gave us a glimpse of where we would be headed. Obviously, the top line and bottom line numbers aren't where we achieved to be, but at least it was a positive reaction to a lot of the hard work that we've put in over the last couple of years. I think Q4 will be similar, if not in a similar vicinity. And we expect that next year onwards, we should be positive on a quarter-on-quarter basis as we sort of fulfill our expansion and growth initiatives.
Right. So just wanted to get a little bit more perspective on this growth and expansion initiatives, Chirag, if you could share with us.
Yeah, so as you know, we've always talked about DNA being now the DNA of Walchand Nagar. It's defense, nuclear, aerospace. We're fully entrenched in the nation's plan of being Atmanirbhar Bharat by 2047 in all those sectors. We've already done one fundraise in 2023-24 and built out some infrastructure that will cater to the aerospace and defense growth that will happen in at least the areas that we service, which is the missile program, all the launch vehicles, and some of the launches that we do for BrahMos and other programs. The next phase that we look at is obviously the nuclear Shanti Bill growth that will happen. I've already talked about it, I think, on this channel couple of months ago, that we are going to do another fundraise in the next 3-4 months. It will be a larger fundraise. It will go specifically to invest in a brand new nuclear manufacturing facility here in Valchandnagar, and that should take care of our contribution at a highly scalable level to India's nuclear program over the next decade, 2 decades that will be required.
Right. Just wanted to clarify that, Chirag, you had mentioned that earlier as well. So this fundraise is expected to happen in the next 3 to 4 months, and this will be for the nuclear business, right?
Yeah, mostly. I think I would say 75% of the fundraise on the capital expenditure side will go for nuclear expansion. The good thing about our business is that a lot of the machines that we invest in are very fungible and can be used for our defense requirements as well as our larger aerospace requirements. But yes, I think 70 to 75% of our capex will go specifically for nuclear and nuclear requirements.
Right. So 75 is nuclear, 2025 is for defense. Okay.
And some working capital, of
course. That would be there. Apart from that, Chirag, let's also talk about the operating leverage part. Of course, you cannot share the margins outlook for Q4, but there was a good hint that this operational leverage will play out because your margins were, going here, there, it was in the negative. Then there was a turnaround in the third quarter. A street is always concerned about the return ratios for your company. So will we see the same performance in the Q4 to put in perspective?
Yeah, I mean, look, our business can be a fairly good margin business. I think the problem we faced is over the last 3-4 years, if you look at my numbers, and I know you kind of showed some numbers earlier, the problem has been obviously our debt, right? And that's what's been eating into most of the positive margins that our defense, nuclear and aerospace businesses have been generating. We've now brought that debt down from 400 crores to nearly, I think long-term debt is only 40 crores and the rest is just, working capital debt from the banks. That 40 crores we hope to pay off in the next 12 months. So we will be technically a long-term debt-free company. And our middle lines aren't changing because, we don't need to add too much manpower. We've maintained our manpower in the company, even at these reduced turnover levels. And so the team here and the people here are ready to sort of grow the company and it'll just keep adding to our margin numbers at the EBITDA level going forward. And then, of course, at the PAT level.
Right. So once that happens, then of course we're going to get good return ratios as well. Nicely put, from 400 to 40 crore the story. But of course, one more, a lot of investors in your company write to me that the share pledge is a concern. So if you could give me, since your debt is also coming out with a timeline share pledge, is there a reduction timeline at play?
Yeah, sure. I mean, it's actually very clear on the share pledge. The share pledge is a hangover that came from the time when we had KKR as a structured debt provider in 2018-19. That's kind of trickled over to our, to Neo Capital, who's given us our debt today. I think as soon as that is paid off, the pledge goes away. And there may be a small pledge to the banks in the future, but as long as our credit rating improves and we become investment grade, that goes away as well. So I suspect that the share pledge, the promoter share pledge next year will be non-existent.
Share pledge will be non-existent next year. And
as long as we pay off the debt, right? That's the most important.
Right. So So both of them are of course interconnected for our viewers, and just to put that in perspective, accounting 101, that's what Chirag ji has explained us. But apart from this balance sheet numbers, the nuclear segment, we spoke about the Shanti bill, but right now also there's a good buzz in the street on the private players entering in, because we heard about the missiles. The DRDO spokesperson said that now a private company can do missiles, ammunitions. Now, what does Walchand Nagar do? Because you have been already involved with missiles, and now a private company can do without much tie-up with a public company. So how does Walchand Nagar feature in that?
So on the defense side, obviously, we will continue to supply to rocket motor casings to BDL, who will continue to probably be the largest player in the missile game. We are in 13 different missile programs. Those will all come to scale, other than Akash, which is of course already scalable, and BrahMos. We should see the next 12 to 24 months a lot of scalability on the missile side. We're not currently in a position to get into manufacturing our own missiles, but that is something we aspire to do over the next 3-4 years as a DCPP partner to the government. As far as nuclear is concerned, there's a lot of buzz. We're getting ready for all that is being announced in the country. We will continue to remain a core equipment manufacturer for the nuclear industry. We will expand our offering of what we offer currently versus what we want to do in the future. But we don't see Walchand Nagar in the near future being a nuclear power producer. I think we leave that to the larger private sector companies, some of whom have made announcements in the last few weeks as well. And our idea is to just expand our offering, increase the speed with which we can deliver components to not just NPCIL and NTPC, but also then to any of the private sectors who want to, private sector players who want to get into the business of power generation. So, it's a 10-15 year game, and we are, kind of preparing today to be ready for when those orders come in, I would say in the next 12 to 18 months.
Right. And speaking of orders, what's the recent order book, third quarter, or if any addition orders have come in the fourth quarter? If you could just give us a sense of, how the order book is looking like currently.
Yeah, so I think March end or April 1st, start of this financial year, our order book has been about 600 crores. I would say executable order book over the next 18 months out of that 600 is about 400, 420. Last year was a bit of a slow year as far as order booking was concerned. We were hoping that we would have got a few government orders that were promised last year, but I think there has been a slowdown in that. But I sense it's more of a postponement rather than any kind of concern, and we should see a fairly large order booking this year with Walchand Nagar.
Right, so that means a large order booking coming in, debt reducing, and the share pledge reducing. 3 important conversations coming in from Chirag ji. Thank you very much, Chirag, for taking out your time and clearing a lot of doubts raised at KYC. It's always a pleasure to talk with you, and that's the management of Walchand Nagar Industries. There are some concerns regarding the stock, but definitely for the next 12 odd months, the management has given a strong commentary. For interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vacharani, and today the first topic that we're going to talk about is co-ownership. Now, a lot of people in India hold co-ownership in terms of property, and to understand as to what are the legal aspects of this, what are the documents that one must have, what happens if one co-owner dies, all of these aspects are very important. to understand from an investor point of view is invested in a property which is held in a co-ownership. The relationship could be anything. It could be friends co-owning a property. It could be spouse. It could be along with spouse. It could be along with your parents, with your child, etc. To understand and to decode exactly this, we are now joined by Advocate Tushar Bhatnagar, who is the managing partner at Lex Victorem Law Offices, joining us now. Tushar, thank you so much for taking out the time, first of all. Before we start, diving deeper into this topic, the basics of co-ownership. What is exactly property co-ownership, and why are more Indians opting for it today?
Hi, Mahima. Thank you for having me on board. So talking about co-ownership, actually, it means two or more people legally owning the same property, immovable property, either in equal or defined shares. So the question that you asked, that in India people are actually opting for co-ownerships, it is actually because of mainly due to high real estate prices, the joint home loans, which are on a lower interest rate, and also the dual income households. Actually, the husband and the wife both are working and they're getting incomes which are coming out on a dual basis, and that is the reason they want to actually co-own a property. And it actually helps the couples to buy a household, which is actually a dream for a lot of people and a lot of couples. And that is the reason co-ownership is becoming the thing in India.
Okay. What are the legal documents, Tushar, that one must have when it comes to co-ownership? Especially, generally the conflicts don't arise if the co-ownership is in the family itself, right? But I think more disputes would arise if the co-ownership would be a business partner or friends, etc. So what are the legal documents that one must keep in order to, make sure that his or her ownership in that co-ownership is legally with that person?
So I would say that the documents that per se will be required to co-own a property should be more in the basis of clauses which you have to get it written in a agreement, which will actually be the ownership percentage of that property, the financial contribution being done by each individual over that property, and if there are any loan liabilities post separation or post dissolution of that business, that is also very important. The loan liability part is the most important part, which actually helps you understand the pros and cons of that agreement. Also, the exit and buyout terms. If you wish to exit, and if you want to buy out the other individual, in that cases also. So these clauses are very important to be inserted in that document, which will help you in detailing and understanding that property and its integrities.
Okay, got it. If two co-owners, like you said, right, these are the important aspects that one must have in the agreement, but if two co-owners disagree on selling a property, what does the law say? What will be the recourse to that? Of course, it also depends on the terms of agreement as well, but generally, what does the law say?
So under Section 44 of the Transfer of Property Act, it is clearly defined that the co-owner can mortgage, gift, sell, assign their own share of the property, obviously not the other part's share. So see, one co-owner cannot force the other co-owner to sell the whole property. There has to be a consent between the parties. First thing. Second thing, assumingly that the other co-owner is not agreeing for selling the property, then the other co-owner can approach the court, file for a partition suit under Order 20 Rule 8 of CPC, which is Code of Civil Procedure of India, which may ultimately result in a division or a sale of the property. There is a preliminary decree that will be passed by the court, then there will be a final decree that will be passed by the court.
Okay, and that includes loan against the property as well. If the co-owner wants loan against his or her share of property, that is also allowed?
So if the co-owner wants a loan against the property, he can take a loan and mortgage also for that specific share of this property, not the entire property. And henceforth, these days, the banks are asking for no objection certificate from the other co-owner also. And they are making them as the signatories to that loan documents. So without that co-owner's consent, the loan will not be passed, even if it is for their own share.
Okay, interesting. So mutual consent is required when it comes to taking a loan.
Very much required.
Makes sense. Because, but I just want to understand if the valuation can be determined separately, according to the co-ownership, then also mutual consent is required, right?
Yes. Okay. Either ways, the valuation can be done separately because on basis on that valuation, you will be getting that loan, right? But since it is a co-owned property, the bank will require the NOC from the other co-owner as well.
Got it. Okay. That's pretty clear. But the other aspect is what happens to that co-ownership when one of the co-owner dies? What is the legal recourse for transfer of that property to his or her spouse, children, parents, etc.? What happens in that case?
So in India, the co-owner's share is not passed automatically to the other surviving member. There are succession laws. There is Hindu Succession Act 1956 or the Indian Succession Act 1925. So the succession is determined by these personal laws, not by co-ownership. So if there is a individual who might co-own this property, but is not a legal heir to that property, then the legal heir will be the rightful owner of the property, unless the automatic transfer to the surviving co-owner happens only if there is a specific survivorship clause that co-owner will be the legal heir, legal authority of that property, of that specific other part, only when there is a survivorship clause in the agreement. Otherwise, the legal heirs will be the actual owners of the property.
Got it. And what are the most common legal disputes that you generally see in co-ownership property cases?
So the property disputes that we generally come along is the disagreements over the sale. The other party is not ready to sell the property, and the one party is actually occupying the co-owner's property illegally, trying to create a possession of his own, trying to keep certain stuff which are immovable, and they tend to go beyond the scope of their own property. Then there are disputes over financial contributions, that I gave this much amount towards the contribution of buying the property, I gave this much amount. So it is always better to pen everything down, specifically the percentage in respect to co-ownership properties.
Got it. Okay.
Yes. So there are basically rental disputes also. The rental income that is generated from the co-owned properties. There are rental issues which come across to be a very prevalent in India per se, and that is the sole reason that everything, I personally suggest that everything should be penned down with respect to the contributions, with respect to the percentage of division, with respect to the share, with respect to the dimensions of the partition with the property also.
Makes sense. Do you think a co-owner can be forced out of the property if if they legally still own the property? Is that possible because of any dispute arising, or because of maybe some harm that the co-owner is causing to the property or something of that sorts?
Actually, no. You cannot force a co-owner to dispossess the property. They cannot be evicted like a tenant. So the remedy that the other co-owner has, for example, if they are wrongfully wasting the property, then the legal remedy that they have is through mutual agreement or a court-ordered partition, that they amicably resolve their disputes or they hit the court's door. Yes.
Okay. For couples who are buying a property together, what are the clauses or per se the terms of agreement that are non-negotiable?
Yes, that's a very nice question, actually. So these days, couples do fall in these situations where their dream is to buy a house together, and few of the very important clauses are again, the ownership percentage is very, very, very important. The financial contribution again, and exit clauses, which will be very necessary. Also, the very important clause for the couples is what happens in case of death or separation or divorce. So those this needs to be very specifically written. And if this is not penned down in the document, this will create disputes later, because nobody can guarantee a lifelong hold of marriage. And so this is very important to get on to a mutual agreement and pen it down before heading forward.
Got it. In terms of mistakes that people generally make when it comes to making this contract or agreement while doing a co-ownership, what are these mistakes? What should one most certainly look at?
So the biggest mistake is, Mahima, that they rely on informal understandings. For example, I joined this meeting through a Zoom link that was formally given to me, right? So nothing should be done informally, especially with respect to immovable properties. Be it couples, be it individually owned, be it co-owned, anywhere. People often contribute unequal amounts but register the property equally. So for example, a co-owner has contributed 20% of the amount, but the other person has contributed 80%. Yet, the document was penned down that the property is owned equally amongst the parties. That is too unfair, right? So the registered title usually should prevail over verbal arrangements, and it should be penned down.
Got it. Okay. Just one last question. If somebody is already in a co-ownership dispute, what is the first legal step for him or her?
So if there is a prevailing dispute, then I think they should send a legal notice asserting their rights and seeking resolution with respect to, if there is a dispute resolution clause in their agreement, they should invoke that. And then the next step would be filing a partition suit. Oftenly it is tagged along with an injunction suit and an application for injunction to prevent sale or misuse of the property.
Okay, all right. Tushar, thank you so much for helping us understand this entire aspect of co-ownership, and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, so we talked about property co-ownership. Now, the other aspect that I want to touch upon is global investing. A lot of people, a lot of our viewers are going ahead and asking us as to whether they want to invest in the global markets right now. What should be the right strategy? They're also asking, first of all, whether we should invest in global markets or not. And to decode all of this and to give all your answers, we're right now joined by Zidus Mahajan, who's the managing partner and CEO of Complete Circle Wealth Solutions LLP, joining us now. Zidus, before I ask as to what should be the strategy, I think the important question right now here is considering the way global markets are right now, right? There's volatility, there's rate uncertainty. Why should Indian investors look forward to allocating fresh money into global markets? Should they, is the first question. And if yes, why should they?
I think let's break it down. India as a percentage of global market is hardly 3%. US is 45%, Europe is 15-16%. Then you have Korea, Taiwan, China. So I'm saying overall basket, when you are India specific, you have 100% location in India, you are participating only in 3% of the globe first. So let's set the context that there is a market outside India, and I agree with you. There's so much of disruption, there's so much of geopolitical issues, there's so much of valuation issues. But let's take for US, if you take out the Nasdaq valuation, which is around 26, 27 trailing, S&P 500 valuations are in line with what S&P 500 valuation in line with what Indian markets are. So I'm saying one, I will break it down to 5 parts. You need a dollar return because rupee has a equation of depreciating against dollar. you should have a foreign allocation. That's why one number of reason one, that you should deploy outside. Second, there are many sectors which are not present in India only. Let's say AI related sector, digital security related sector, let's say your nuclear energy related sectors, which are not present in India only. So the only way you can explore is through global markets. Third, right now, irrespective of there's hardly any return in the last 18 months, zero to negative return in Indian capital market, still valuation wise, market cap to GDP, we are high, and still valuation wise, vis-a-vis other growth countries like Taiwan, China, South Korea, we're still a little high. Fourth, you can create a basket for yourself, and there is an LRS window of 2.5 lakh USD for every PAN card every year outside India. And fifth, you go away from a country-specific risk with 100% allocation. God willing, India will keep on doing well, and your core should remain in India only. Depending on individual risk appetite, you can actually allocate globally in different markets.
And if somebody is looking forward to investing in global markets, what percentage of his or her portfolio allocation should be in global markets?
So let's say if you're very conservative and you just want to explore that how things looks like, I think 5 to 7%. Someone who's little evolved and looking at sending kids outside, and they want a dollar income for themselves, and they want some dollar investment, then maybe you can go from 10 to 15%. Any NRI who's based out of India and is looking to invest and explore, the allocation should be much more. It can go to 20 to 25%. So broadly, there are 3-4 different sets which one should look at. But at the same time, when you invest in a global market, just don't look at only one fund or two funds. Diversify there also. Just don't be country specific, because let's say FANG stocks have done well. Just don't chase those FANG stocks. So I think maybe one allocation can go to FANG stocks and other can go to maybe Korea, China. I'm just taking maybe Europe, which is not done over a period of time. Maybe Europe will evolve. We have seen there are a lot of changes happening geopolitically also. So there are various sectors like pharma, defense, globally will do very well. So I think it depends on, if you have that bandwidth to explore, fine. Otherwise, take a fund route and invest through a fund route.
Shudhish, any specific market that is looking very attractive right now, be it US, China, etc.?
I think Taiwan, South Korea, these are two markets. If you ask me, I feel that I wouldn't mind a fund which is more of Europe-centric also, because that market over a period of time has not done well. One can look at that also. And if you understand commodities, then maybe Brazil, because I don't have much know-how about commodities, but if you understand commodities, then maybe you can look at Brazil also.
Interesting. Shidhich, now from a procedural point of view, if somebody wants to go ahead today and invest in these global markets, what is the step-by-step process?
So mutual fund has a window of 7 billion and individual fund house has a window of 1 billion USD, which is almost done and dusted, except for few funds where you can allocate. If I'm not wrong, Axis is accepting in the China fund some allocation. So there is no route through mutual fund you can do. But yes, there is a GIFT City route through which you can do. And then you can open a demat account outside India and you can buy stocks directly, which I normally tell people not to do, because it's difficult to understand your own markets, and then you go out and understand those businesses. It becomes really difficult and risky also. I think there are GIFT City route through which you can participate. And there are a few funds where you can participate with as low as 5,000 USD also. So take a holistic view and look at 3-4 options. And as and when time will pass, you'll see a lot more options will come through GIFT City route. So I think DSP has one fund through GIFT City route. Mirai has another fund. SBI has another fund. Whitehawk has fund, which is outbound. So you can look at, depending on what type of minimum ticket size they have, and have a mix of couple of funds and invest through GIFT City. Right now, mutual fund route, there are very few windows which are available where you can invest, because we are not able to step up the overall limit, and at that limit, everything is consumed.
Got it. For anybody who's investing, Kshitij, passive growth should be the approach, because not everybody today will be, in the capacity of tracking those markets actively, right? How do you suggest, about that?
I think if you can open an account outside, I agree with you. A good combination of passive and active can be looked at. Globally, also passive is around 45%. You can have index exchange, and that's how you can invest. But there are some active funds also where there are new sectors, as I said, with a sector with regard to open AI, generative AI, digital technology side sectors. And now with the way things are changing globally, you'll see defense and pharma also globally will do very well. So I think a mix of both should be approached. But yes, the easiest and safest among both the sides are that one can look at doing ETF or index funds outside India, because you get a kicker of rupee depreciation also. So let's take, for example, you get 15% here and 15% there. There is 3% depreciation every year is happening. Your actual return becomes 18% in INR terms.
Kshitij, rather than, I'm just trying to think out of the box right now, rather than deploying your money, because you said, right, mutual fund route right now is very restrictive. Gift City, of course, is a very good option, but I believe that it will also have a minimum amount to be invested, right? Do you think that rather than doing that, going ahead and, probably looking at alternatives in terms of international bonds, commodity exposure, that could be an alternative route? This, of course, cannot be a passive one. It has to be an active one, because people will have to track these very actively. Would you recommend that?
I think problem with equity is that you can have a mark-to-market loss. With bonds, because they are leverage position also, it can be binary 0 or 1.
Yeah.
So, and the way, let's say largest market is US, the type of debt which it's carrying on its shoulder, at these levels, around, let's say, 4.3, 4.4, 10 year, or maybe 30 years around 5% level, as dollar return looks attractive if rate cuts will happen. But outside US, I don't think that that's a good idea to look at the bond side, because in India, 10-year GSEC is giving you 7% as we speak. And obviously there was a rate cut, and, repo stands at 5.25, and your GSEC 10-year is at 7%. Now, my home loan is at 7.15. So it can be possible government of India and I'm buying at the same price. So eventually that rate cut, what has happened in the past will reflect in your GSEC also, if inflation will hit because of oil prices. So I think bonds, government of India bonds are better as an option. But yes, there are countries which are going to grow and they'll become self-reliant. There are sectors which are very promising from here onwards, and there are funds and ETFs available outside. So one should surely explore that. And if you can't do it yourself, as you said, there is a limit of minimum amount of investment, but many houses are coming with a range between $5,000 to $25,000 also as a minimum amount to invest.
That makes sense. Absolutely makes sense. Kshitij, what are the biggest mistakes that people generally make while starting the global investing? Do you think it's ignoring taxation, maybe over concentrating, timing the markets, or for that perspective, just having concentration in just US tech, for example? What do you think are the common mistakes, and how should one avoid them?
I believe very good question you have asked. Earlier the taxation used to be of fixed income, where after 3 years it used to be 20% with indexation. Now the taxation part is gone, and whatever money you are going to generate as capital appreciation, you've been taxed at full rate. And that means if you're 30%, whatever gain is there, you're taxed at 30%. So one, you have to take into account. But the opportunities are there in global markets, because as I said, some part has been taken care by your currency also, because currency depreciate every year. So opportunities are there. Second, just don't rush after, the returns, which we keep on saying for Indian capital markets also. I know FANG stocks, FANG as a story looks very, very, very promising. And the valuations are also little on a higher side, but have a diversified portfolio. There are many other sectors also which will do well. So just don't be specific with regard to US, and in US only FANG or let's say NASDAQ. Have something in NASDAQ, but at the same time, treat Nasdaq like a small cap allocation in your overall bucket. Have at the same time have a multi-cap, flexi-cap, and other ETFs also, so that if for some reason government takes away the benefit which it's giving to IT companies there in US, and some reason stocks will fall, at least you've been cushioned with other sectors and other countries also. So that's the overall benefit of when you go outside India. But yes, tax is one thing which you have to take into account. Whatever you're going to generate will be taxed at your income tax level.
All right, Kshitij, thank you so much. I think anybody who's watched this has now an A to Z view of what global investing should look like. So thank you so much for giving us that entire perspective.
Thank you very much for having me.
All right, viewers, so that was, of course, Kshitij Maran talking about global investing. In fact, we also talked about co-ownership. But with that, completely out of time on this edition of Your Money Matters. Do stay tuned. More news and updates on the other side.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy
या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
AU Small Finance Bank has reported a strong set of numbers in what is admittedly a seasonally strong quarter as well. But on all parameters, it's been quite positive. The only question, though, is can that trajectory continue, especially with the possible stress coming in, second-order effects coming in from the West Asia crisis? To speak on all of this more and plus the performance especially, I'm joined now by Vivek Tripathi. He's Executive Director, AU Small Finance Bank. Mr. Tripathi, thank you so much for your time to us here at NDTV Profit. Let's first begin by recapping the quarter that has gone by, because there's been robust performances and a big jump in profitability as well. What has boosted this?
Good morning, Governor, and good morning to all the NDTV Profit viewers. Thanks for the opportunity, to share our thoughts on the results. Q3, Q4 is always, seasonally strong quarter for us. The larger, slippages which was arising from the unsecured portfolio, it tapered down significantly in Q3, and that momentum continued in Q4. So obviously that has helped us. But overall, the business movement was pretty strong. Momentum was pretty strong, and aided by the government cut on GST, which further boost the consumption, vehicle sales, etc. So the overall business momentum in Q3, Q4 was pretty strong for us, and we, reasonably confident that this would continue even going forward in the current financial year.
The CASA ratio was slightly lower at 28%. What is the outlook on increasing low-cost deposits? Because there's quite a bit of reliability on bulk deposits as well. Do you see this impacting NIMs going forward?
Our focus has always been on, the stability of deposit, right? CASA plus retail TD plus, non-callable bulk TD, that constitute about 80% of our, I would say, stable deposit. So you would understand that it's not I would say, a specific bank problem. That's a overall challenging environment to raise deposit for, banking industry as a whole because of the constant shift towards the capital market. But, we are confident that we are focusing more on the acquisition. If you look at our new acquisition, it's month on month touching about 100,000 customers, which is pretty strong on the CASA side, right? So net acquisition value every month is pretty strong. We are very, very confident that with the diversification on, even from the larger base of the liability from the, commercial banking customers, the, so to say that branch banking will be free from, running after the larger deposit piece. They will be more focusing on granular deposit, and that has been our focus, right? So it happens, right? We don't look at quarter on quarter, but what we look at overall, whether strategically we are going in the right direction or not. So all efforts are to go out and acquire more and more, I think retail customers. And I think universal transition will help that. It will help us in terms of acceptability on the retail side, especially on the salaried customers who have a large, SA base in the industry. And also it offers us the opportunity to significantly bring down our cost of fund, right, over the period.
No, but that's going to come, and I'll come to you, Mr. Tripathi, on the universal bank transition when you hope that will happen. But just coming to the here and now, and as things stand, with the kind of dependence on bulk deposits, do you see a need to maybe tweak up loan rates going forward?
No, absolutely not. You look at our cost of money, right? Quarter on quarter sequentially, right? The cost of deposit has gone down substantially. We were not anticipating that we will touch. So our exiting cost is significantly lower than what we anticipated at the beginning of the year, right? So there is a constant, I would say for us, the NIMs, I would say the margins, in terms of the quite a expansion happened, and it should be sort of bottom out scenario for us. We will further diversify our one funding base, and second, even on the asset side, we would further have to diversify our customer segment within the, let's say, wheels, within within the mortgage book, because if you are catering to a customer on the liability side, you need to cater on the asset side as well. So you will acquire customers who tend to be your liability customers. You will cross-sell them, upsell them. I would say more prime segment customers in the metro and tier 1 market, where we'll have to offer a competitive rates, because these customers are getting competitive rates from the competition. So if you're not doing holistic banking with them, the stickiness of the customers can be a problem for you. So we'll eventually have to diversify our asset customer segment as well.
Okay, fair enough. So what is the kind of NIM guidance you're looking at for, say, the next couple of quarters? Till you acquire all of these coveted customers that you're talking about, what is the current NIM guidance looking like?
So we are not giving any NIM guidance. What we are saying that, we stated earlier that we are guided by 1.8% ROA, which was committed for 2027, right, FY27. And our exiting quarter end number says that we have touched that. And our endeavor is to, deliver the same, right? And over the next 5 years, 3 to 5 year journey, we are saying that we want to remain in this zone, right, where we grow to 2.25x to 2.5x of the nominal GDP, and we deliver 1.8% ROA kind of a return. And that has been our endeavor, and that we want to consistently do. So I think sustainability of this number is an important aspect of our overall, working pattern.
Okay, that's fair enough. As we've been speaking to analysts all morning, Mr. Tripathi, and the numbers are robust, the growth of the bank is good. The only sort of concern in the street's mind, and I'm going to sort of talk to you about that, is the profile of your customer base and their vulnerability to what has been happening geopolitically. The high dependence on wheels, for example, the kind of base that you have, which will be impacted by what's happening in the West Asia crisis. First of all, do you see that as a concern? Are you seeing any initial signs of that kind of stress?
So, Tapan, I want to give sort of assurance and understanding to on the viewers as well, that so far what we have seen on ground, nothing is visible to us. All are, from a repayment behavior, collections feedback from business and credit ground team, the customer impact is not there. However, if there is a pass on of inflated, I would say, input cost, including fuels. If there is a second order impact, it would be a wider impact in the economy, and that every segment of customer will get impacted. It's very difficult to factor and assess as we speak, but at this moment, there is no impact on the book. And we are as good as we were just 2 months back, right? So it's difficult to say that you have any specific segment which will get impacted first, because we do not have a very large exposures on one gas-fired industry or industry which is completely dependent in terms of raw material from the West Asia, or exporters who are completely dependent on West Asia. So to that extent, we are isolated. But, energy is one area where India is yet to be self-reliant. And obviously, if the input cost goes up, there will be a second order impact on the many things. And that would include our customers as well.
For example, when this whole LPG crisis was happening and, small restaurants, etc. were getting hit, or tile makers were getting hit, were you seeing any of those frantic calls or any of that impact coming in? It may have settled after a few weeks, but that was a first rumble, so to speak.
We also thought that there could be some calls and there are some pockets where we would see this. But, I would be very candid that we have not seen anything of that sort. People could able to manage, or we did not have large exposures on those entities. If you look at our MSME exposures in the MBL, those are generally small mom and pop stores. They are B2C customers, so not much impact there. On a wheel segment, more than 50% book is a personal vehicle, which is, again, the people are driving for their own business or own purpose. So you are insulated that way. The larger part, again, is a small commercial vehicle, which is a last mile connectivity. So we had a very limited, so to say, exposure even on HCV and MSCV segment, right? So we did not see it that way. Hopefully, if things continue in that manner, I think the Q1 would be a testimony, because Q3, Q4 is anyway, Q4 is a very, very strong seasonal quarter for us. let's see and evaluate, how it happens in month of April, May, and June.
I think that's fair to say that not just you, everyone is waiting to evaluate that. Two questions more and quick ones from my side, sir. One is the new ECL norms from the Reserve Bank of India. What's the kind of provisioning you will need to comply with these norms?
So, Tamanna, the final circular has just come in. We need a time to assess and understand it. But just to give you assurance that large part of our asset is a retail secured asset, where historically our loss given defaults have been very, very low. The probability of default, correspond to the customer segment we cater. So we don't expect any sort of disruption there. But yeah, we'll have to digest this and understand, and dissect this. Basis that only we can comment.
Okay, fair enough. And last point, what is the kind of timeline you see to the progression of a universal bank? You spoke about that at the start of that interview and how that is going to change a lot for you.
So, Tamanna, we've made our final applications to regulator in the month of March, and we are just waiting. It might happen this quarter, next quarter, we don't know. But, from our side, there was a relaxation on NHFC structure, which has been given to promoters, and bank has made a formal applications to regulator, and we are just waiting for final consent.
If you get the nod, you are ready to make the transition on your end?
Yeah, we are fully ready in terms of all platform
okay.
capabilities and product offering. We were there. We're just waiting for a transition to happen.
Okay, thank you so much, Vivek Tripathi, for speaking with us, and I hope that sore throat gets well soon. That was Vivek Tripathi, Executive Director at AU Small Finance Bank, talking about the quarter gone by. Robust performance from this small finance bank. Big conversation this morning. Anirudh Sarkar, co-founder and CIO of Equinova Investment Managers, joining in on the show. Anirudh, I'm wondering how you're looking at the kind of knock that banks have taken, or public sector banks have taken, about ECL norms. And I don't want you to comment on individual banks, but I'm zooming out with the smoke signals that we're seeing. This is also the regulator coming in and saying, listen, tighten that belt and be careful, isn't it?
No, I think absolutely. I think it's always, if you look at the Indian banking regulator, I think we have always been one step ahead of anything going wrong. And I think that makes our banking system extremely robust. Having said that, I would say this was required, and this was something which was in the coming, and this was expected to happen. So I would not be too worried about the ECL, the regulatory thing which has come yesterday and which is going to go effective from 1st of April 27. So I think it's the normal business, I would say, for me.
Okay. So you're not seeing any impact or any change of sentiment that you have towards the public sector names? Because they're reacting quite negatively to this.
Unfortunately, the way the markets have been happening these days, on every news, markets have been reacting. But typically, if anyone is looking from a slightly medium to longer term view, I would still bet on the PSU banks. And I think that is where, if someone has not got into it, I think it's a good day to enter it, considering that you have all these banks down around 1%. But I would not be a person who would want to exit out of PSU banks because of this ECL, the guidelines which has come. So I'm still a buyer, and PSU banks continue to be overweight allocation in my portfolio, also because of the valuation comfort, the growth, the ROE improvements which we have seen, and the balance sheet potential growth which is visible from there.
Anirudh, so that's as far as banks go. Now that the theory around the rate interest, good morning Neeraj here, interest rate trajectory is maybe different from what it was believed to be in 2025. What's the call on NBFCs? Some of them are showing some very good numbers. Maybe the GST cut is helping people buy more, but is the view on NBFCs constructive, or is it not so?
On the NBFC side, and if I just put along with the NBFCs, if I put the smaller banks also, I would say that, there are some very selective names over there where I'm seeing good valuation comfort. In fact, in some of these cases, they have had some good, big, large investors who have picked up good stake and infused a lot of capital in their businesses. But the market has not yet reacted positively to such events. So I would say with a large infusion of capital in some of the good NBFCs, their cost of borrowing will go down. Their balance sheet improves, the lending growth improves. And I think that is where market, because of the overall pessimism around the rate cycle, around the wars and around concerns on growth, a market is not yet pricing in those big events. So I would say I'm a selective buyer in selective NBFCs and also the smaller banks.
Okay. The other thing, Anirudh, I mean, I know we're making this, sticking to financials right now, but the non-lending financials and the asset management firms, the numbers, the larger ones, had delivered some fairly strong numbers. I mean, Nippon is a case in point. I think ICICI proved decently well as well. Are large asset managers, large wealth managers, names that people should consider from a slightly medium-term perspective? Do you like that space? Why or why not?
Absolutely. In fact, I've been a believer in the whole capital market play. And for the last, I would say, 4 years, capital market play is almost like a 14-15% of my portfolio. And when you say capital market play, I think AMCs is one of the best ways to take exposure there. Purely because if you're betting on the asset growth across India, and within that, if you have these few big AMCs which are continuing to grow. Now, as you will know that, asset management industry is a pure operating leverage business. And as your AUM grows, both from the market action and both from incremental inflows, I think it all comes into your bottom line. And that is where you would have seen a lot of yield improvements have happened for many of these AMCs. You have seen decent amount of growth, AUM growth. The other important part is a lot of action has been happening on the ETF part. And ETF is a very, very passive kind of inflow. And that is where, again, good amount of growth is visible. So I would be a buyer in AMCs even at these levels because it's a multi-year way of taking exposure into the equity market culture which is growing in the country. Wealth management, broking is the other two areas where I would say there are some good names and I have allocations in my portfolio because that is, again, this whole bucket of, AMC, wealth management, broking is an excellent way to take exposure into the equity culture. And yes, some platform businesses also, which become the platforms for giving exposure.
So that's with regards to where the entire financial universe goes. Anirudh Gundalia, IT, it has been a no-go zone for you for quite some time now. This quarter post-earnings, a lot of commentary has changed where people are of the opinion, or fund managers are of the opinion, that where there is highest pessimism, you can look at IT probably as a sector where there is pessimism, where you will find value going ahead. Or there is a change of stance coming in that from a no-go zone, you can look at IT from now onwards with the way valuations are. How are you looking at it?
I would continue to maintain my avoid stance for IT, and I would not want to preempt my entry there because when we talk about valuations, in fact, IT valuations looking attractive has become kind of, a very common discussion whenever we meet investors, whenever we meet in our the market community. But where one needs to see is that the valuation is attractive on the PE basis because, historically they would be at, 25 to 35 PE multiple. From there, when you have seen a decent correction on the PE basis, it looks attractive. But when you superimpose the earnings growth for this quarter, for the next quarter expected, and the next quarter expected, that is where my concern is that on a PEG basis, they are still expensive. And if you're growing at the low single digits or the mid single digits, and you're still getting a 18 to 25 kind of a PE, I would still be away from IT stocks. I don't mind getting in 5-10% higher, but I would want to wait for at least 1 or 2 quarters to get visibility that the demand environment has improved. The biggest issue in IT is that, it's not about AI only. AI is definitely disrupting businesses. It's eating into their the margins. It's eating into their deals. The other big issue is that you are sitting at a very large fixed cost, most of the Indian IT stocks, IT companies. And that is where I would say how AI is disrupting their business margins, bottom lines, growth is a very, very uncertain thing, even at this point of time. There are some management giving very positive commentary also, but body language is not giving me the comfort to get in there.
The small other pieces that there's a lot of chatter around the end product prices of some of the chemicals having gone up so much that even